It was a mess. Good. Okay. Let's go. So dumb. All right. We need to look at our crypto stuff today, I think. I haven't looked at it for a while. Oh, where was that? Man, I don't even know. Maybe here. I'm not sure why I have 3 bars on this one anyways. Let's go back to 2. This might have been it, I think. Curious as to what's going on. I haven't really looked at it. Wolf did something. We'll check that out in a minute. But I'm probably going to start with AMC and GME today and just hit those because I didn't really look at them too much yesterday. So Doge is at 36 cents. Really odd price action. Yeah, so it broke the creek, but then it failed to advance over what I would call like the ice. Like this is rising support back here, and you can see like when you get to the other side, obviously it's acting as, on the wave, it's acting as resistance. There's probably more to it than that. We were looking at like every little piece of this. There'd probably be more to it. But for now, it's pretty straightforward. So this dumped back beneath, plunged really low, came back beneath that falling resistance that it had come over. So it should have found support here. And then, unfortunately, and I'm not really sure what to make of this, but it looks like it is getting a little hung up. So it might be an issue, because this right here could be a problem if this right there, see that? So that hit is on like this little teal line here, and that comes from pretty far back. So it's like the same thing. You're seeing like there's an issue there because it's having trouble. Keeps crossing down. Hey, good morning, Dave. Keeps crossing down. So it's like holding a support and then it crosses down. And this already did this once and it broke back above. So it's not like the end of the world, but when you look at the bigger picture, this is the main trend. This is your big trend. If you lose that trend, again, not the end of the world, but you'd have to find a new one. And there's a probability that it's like here, which is fairly low. This would support the idea that this needs to come all the way back down to like 22 cents and test this top. Not the worst thing that could happen, but certainly would be a difficult pill to swallow if you were expecting it to just take off. This is like best described as like an SOS of sorts. It's a strength signal. I mean, it came up above this top. I think it's holding pretty well. The RSI's cooled off a lot at this point, which is great after coming down quite a bit. I mean, I'm on the daily, so looks pretty good. Key potential rise to 140 if broken. Oh yeah, man, that's what we were saying. Look at that. They have my same numbers. That's crazy, dude. I wonder who wrote that. 34 cent. Yeah, man. The key resistance is at 46. That makes sense. It's like the top. And then it goes all the way up to $1.40. That's cool. And if support at 30 cents fails, it may drop to 23 cents. Doesn't that make you feel good? You guys are like, I don't know what you're talking about, Booksy. That makes me feel so good. That my price targets are like solid. Like really solid. At least according to whatever the heck this is. I don't know. That's really neat, man. You don't. I mean, that's just so super cool. It's like really validating, I guess. Really validating. You know, that's hard to figure out when you're doing something right. Aside from just making money, which you want to do obviously in the market, to get the targets like that precise. I'm not sure where that comes from. Maybe it's like like a summary of targets or something. Obviously, this comes from TradingView, but I'm not sure where they get this little blurb from. They just copied me. I'm kidding. Of course they didn't. But yeah, I mean those are the target levels, so it totally makes sense to me. I think that's correct. So right now there's an issue that you would come back down and test the support, but it's not a huge deal. Like if it does do that, it could still run. But Doge is kind of in this precarious situation right now. It's trying to hold a support. I would say it's right at 34 here. And if it breaks through that, it's very possible it goes through this bottom because it already checked it and you can see it broke through it to 26 cents. So that would imply that there was some pressure to try to trade below that floor there. I marked that off based on just a candle from a daily, and I may be a little off about that, but I think that's a good level to have marked off because it's important that it pushed through it. So that would indicate that if it's not a spring, right, which is one possibility, that this is an area that the market found liquidity and then is taking it up to sell, and this would just be like cat ears, basically. And so there's no secret mystery here as to what this would be, right? If you drop down and you create like kitty cat ears or whatever, and then you come back below that creek, which is kind of what we're trying to avoid right now, that's usually pretty distributive. And then the next action will be probably all the same. Usually ends up being the same spot. Yeah, roughly. And it probably different ways to draw this. You could draw it from here to here. It's going to give you almost the exact same result because you're kind of pinching into that right where that support is at 34. So it doesn't really make any difference. It's at 34. So it's kind of a redundant line. But it would be like that, and that would be a bearish price action, typically. Could it be that this is going to form like a spring bottom? Maybe, but usually then you're at risk of, like a head and shoulder or something like that, when you get to that point. It just becomes a new dynamic that you'd have to watch out for. It just changes the way you look at the trade and how you would measure success. But this right here, yeah, I mean, it is struggling a bit to kind of hold that general wave. And it's certainly, you can see those downward thrusts, those flushes trying to like kind of break through. But none of them have made particularly lower lows. This is probably the most concerning one right here because it already came above the creek. So if you're looking at Doge here, that's what we're looking at, then I would probably do this to this and say that looks like an attempted, flush. But I think that you'd have to come in a little bit closer. So I think the daily doesn't give me enough information. I don't see it. So I just have to make sure that that's actually the correct support. Yeah, because this jumped up. You can see that there was a 34.9 resistance here. It came up above that. So that's where it hit that support. It's not black and white. This isn't done yet. It's technically, after it came back down and did this like longer retracement, you can see that there's a jump over the local creek. It's there. It also jumped back above this guy, this red line on here, which is like the higher creek. Or I would just say like the top resistance, if you want to call it that. So at this point, it's sort of right in the pocket where it needs to be. If it can find support, we're talking about Doge here, and break out and head back up towards the top around 48, and then we're back in business in terms of a big run to $1.40. That's a big run, guys. That was a big run. So that'd be really cool to see that. Should be trading Wolf. WULF or Wolf? Yeah, I got a trigger alert this morning on Wolf. I haven't checked it yet. NU came up finally to 1195. So this has been a weird one, right? Not the best of trades for me personally, because even though I entered at a pretty low price, those options stayed pretty dead until about right here. So I got no volatility out of it. It kept flushing down low. But every step of the way, we just kind of watched it, made sure it held the levels it needed to hold, and it did. And so here we are, you know. If it continues, then I think you're likely going to come up to about that 1230 area, and it would be a really strong trade at this point. If you did hold options, you probably are okay. I think the trade for me is done. Obviously, I'm not going to re-enter high here, but too risky. But I think it's a good potential trade. So yeah, I heard Wolf pop this morning. I said I was going to look at AMC. Let me just check Wolf really quick. No, not quite. So there's nothing wrong with this, but it is kind of where I thought it might be in terms of like a wave. And so there's a creek. I don't know if I drew this correctly. It's a resistance that's right around 672. So if you're playing up to 672, that's fine. But if you're thinking it's going to go beyond that, I'm not so sure yet. I think this needs to show some strength and then come back and show like support here. Because this should be like the first big break. And then we should have some kind of a retracement that shows support, and then we should have the bigger move up. Now, I don't know how fast it's going to go. And this looks pretty nice on 30 minutes. Looks like it's trying to hold that support. Let me check 1 hour. Yeah, it's okay. I mean, this is a super long wick here, which is interesting because it came down pretty slow and then it wicked up really fast. So when it came down, I felt like it was painfully slow. So yeah, I still think it's in this pocket where there's just so much that could happen. It did technically pop above 650, but it came right back down. So need to see it gear up again. 1 hour doesn't really bolster my confidence here. Not much. And AMC is in the middle here. So I've been looking at IWM, and I think IWM is kind of at its top. It's really hit the target I thought it was going to hit at 230. I don't know if you know if it got quite there or if it got really close and didn't quite get it. But I figured when it came and held over 225, it'd probably melt up to 230. It did. At this point, it's at the top of its trend. So if it breaks, great, but it's already really, frankly, in a position of weakness. I haven't looked at higher time frames in a bit. So my theory here was that, and I don't have it charted, but my theory here was that this was going to come up and then back up and try to do like a creek cross maybe here and then advance. If it can do that, and it doesn't have to be that long-winded, it could be pretty short, but if it can do that, then I think we're in good shape. But I'm not entirely convinced this is going to rally until February, March. So when I look at AMC, I'm concerned because if the ETF, the Russell 2000, starts selling off again and does not break out, it doesn't put AMC in a very good position, does it? It kind of looks like it just participated in this rally, and then if this starts coming back down, more than likely AMC is going to come pretty low. I don't know. We'll see if it holds its strength here. It might. It's a different stock, obviously. It's not an ETF. So the big concern with AMC today is very simple, is that it tried to make a new high, and it did to some degree if you count the one from yesterday. It did push up and try to advance from the top yesterday. So it did advance away from the creek. So the creek is established by tops, right? So if you've got tops, then you've got a creek. So you've got top, 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 and every time you hit a top, you come down and you try to make a new low, right? And you can see here that this particular top does bend out the creek. It should rise from that point. So from this point forward, it's like, all right, the creek is now higher. Yeah. So what do you have to do? Well, when you go back, you have to then hold the previous creek that was jumped. Did this hold? No. And that's a concern, because normally, obviously, you want that to hold, but it's more than that. It's also like the nature of distribution to like kind of push resistance and then not advance, not hold that advance, but to just kind of head fake and go. So right now, I'm not like bearish on it per se. I think there's a lot of things that could happen right here, for example, because we didn't make a lower low yet. And like that's where I'm kind of like, all right, there's still a chance here, even though it doesn't look hot, because it hasn't technically made a lower low than like 346 or 7 or whatever this is. So I don't know just yet, but I think if that drops, this is going to be in a pretty bad position. You're likely going to see a fulfillment of like a head and shoulder at that point, in which case this is probably going to come down pretty low. Maybe, yeah, it makes sense. It's pretty, I mean, it's really well mapped out. It would come back down to the previous support. So at like 330, which is what I think Darth Vader, I think Darth said that in the Discord, and he's right. There was a very clear target down low if you drop. So if this drops off of this 350 area and it specifically goes beneath 345, that's what I was saying in the Discord. I was like, well, technically looks pretty bullish if it can hold here and break above. A lot changes in like one session. That is an issue, right? On the bigger picture, is this like particularly bearish or bullish looking? Well, excuse me. I'm not a big fan of the curtain drop. So that's this like flattening that happened here. Usually if we see that, we typically do see AMC drop, and that's just been the history of the of the product. Like it just does. Usually this ends up being kind of like a death sentence at the end. There's usually like an upthrust, maybe two, and then you drop. The biggest example of this, of course, being when we had the Judge Zern decision, but it's way beyond that. I mean, we've seen it multiple times. I mean, it's not just like a one-off thing on AMC. It's happened quite a bit. So on AMC, that flattening to the side here typically does not result in bullish action. Does that mean it can't result in bullish action? Absolutely not. And yesterday when I looked at it, I actually put in the Discord, I said, I think it's pretty bullish. I think by about a week away, we still could end up at 450. I don't think it's done per se. When you look at the bigger picture, this is barely getting started. Now, does it mean that it has to go because it jumped over its moving average? Well, no. I mean, there's been times where this has happened before, point in case being like right back here, early January on the 7th, where you can see on the 4-hour there was a turn up. It looks like a divergence. It is a divergence on the bottom even, and then you see that push out that looks like it's going to advance, and then of course it turns back down. It ends up being kind of a kitty cat ear situation. It's possible that something like that happens, you know. But in terms of like where we've been, has this already been oversold? Yeah, heavily oversold on the 4-hour and daily. Could it come down again? Yes. Do I think that it necessarily flushes to a new low? No, although I did identify that about 318 was a likely target if the bears had their way with this, because there's a lot of kind of precision, what do you call it? Trajectories into that point. So certainly not impossible that, you know, like I said, that maybe bears get their way, so to speak, on this trade. And you could end up in a bad situation if you drop down that low, albeit if you look at this as just a wave, any kind of retracement really could be fine. If it's a wave one and it's reacting, really any kind of retracement could yield good result. It could be a 786 retracement, come down to 330 and still take off. So there's not really any panic button right now. It's just a matter of like, all right, where do we want to regain support? Where do we not want to lose support? We don't want to lose, in my opinion, 345. I think it's pretty simple. Like, I would not be happy if we came back through those creeks and lost 345. That would not make me happy. I think that indicators support a bullish move still. I don't think that they support a bearish move as much. They definitely seem to be more in favor of bulls right now. Again, does that mean you can't necessarily come back down here? No. And I think you could come down and kind of double dip into oversold territory. Again, that could just be coming down to like 330, and that's a 786 or something like that retracement here. And then that gives you an ample platform to potentially jump off of. I still think that this area up here around 430 to 450 is highly likely. The other big kind of elephant in the room is this downward trading channel, which has not broken yet. So when you look at the big picture, zooming out, there's no question about it. This hasn't broken out of its channel yet. So there is a looming issue of like, oh, well, it hasn't even gotten out of this like larger creek. So why are we even talking about upside? Again, it's just sort of like implied. It's not that these are confirmed yet. It's an implied move. It hasn't happened. If it manages to hold here and it pushes back above, again, about 365. 365 is probably going to be the better confirmation because that's the resistance. And ultimately, you're not going anywhere if you don't get there. First of all, any overhead value, right? But like that is also now coinciding with a potential creek jump. So you're not going to miss out if you waited until 365. 15 cents is not that much. It's a big deal for potential peace of mind here. What you don't want to have happen is you don't want it to hit that and then stop, because again, the way that this traveled, and I'm going to do a little wave here, would indicate that this is also a break. It's a breakout level. You're jumping one creek, but you're still beneath now what we would call like the ice. So there's what I've been calling the ice, which is like the lower rising trend, which we lost. Okay? So one of the issues, I suppose, if we were going to pick out, again, there's a number of them, I suppose, but if we were going to pick out one, it would be, hey, we don't want to drop beneath, or we don't want to jump the creek and then get hung up on the ice. That does happen in a head fake sometimes, and that's how you get that classic, what we would call it, well, a distribution. And this has happened a number of times, okay? Is this really low? Yeah. Is this lower than you expect it to have happen, Booksy? Yeah, I think something like this, if we were going to distribute, would be much more reasonable and make a lot more sense back up here in the 4s to 450. I think it makes a lot less sense right here, but anyways, that could happen. So you keep that open mind. And that's just another sort of, again, measuring block of success, if you will. We know we have the gap up to 380. There's another gap around 393. There's another gap at 406. There's a lot of gaps to the upside. There's nothing really here that's particularly new or unusual, you know, in the price action. So downside targets straightforward. If it breaks through 345, it's likely going to hit 330. Okay. upside target first needs to get back above maybe 355, 356, and then 365. Okay. Those are your confirmations up. I know you guys are like, well, that's just a range, right? Yeah. But I think that the 345 one is kind of a little bit more, in my opinion, like not a sure thing, but I think it's a little bit more straightforward. Going back up is a little trickier because you have to do a lot of things. You have to advance back over this creek that for whatever reason we did not hold this morning. Then you have to advance over the high here of like 358 and break this creek and come up high to form support. Just a lot of little things that have to happen. It could happen. And again, I think that when you look at the big picture, like 4 hour and the daily, it looks ready. It's just that question of like, are we going to double dip in oversold territory, which historically happens quite a bit. We already did that, Booksy. Well, I mean, like I said, it happens like a lot. Almost all of these are like double bottoms. Boom, 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 boom. That may mean we're done, right? That's a good thing. This one is pretty gnarly. Going back into April last year, there was a lot of oversold stuff. Overall, it looks like a giant double bottom, but on the 4 hour, I'm on the 2 hour. On the 2 hour, it dipped like through a lot. Let's stay on the 4 hour. Maybe it's not that dramatic on the 4 hour. Yeah, it's basically just a straightforward like double dip. So let's see if on the 4 hour we've actually double dipped here. Maybe. And that would, again, support the idea that this is actually the final spring. It's totally possible. This definitely supports that concept because ultimately it gives us a sense of like continuity with what we saw in 2020, where this was the actual check on the wave and this is a dive low. Problem, of course, being that none of the gaps were filled. That's an issue. And all these other things didn't happen. Yada, yada, yada. Okay. Nothing about that is a game-changing, breaking thing. It's just, it is what it is. I think when you look at something like the 4 hour, it becomes really apparent that, again, we haven't left this channel yet. You can see it here on the RSI. You can see it on the main price action. So I'm still of the opinion that even if this S-curve is kind of finished, we could easily see a double dip, come across low, so on and so forth. And until it breaks out, I don't really see the reason to be hyper bullish. I think their indicators are more or less bullish. It's implied it looks more bullish to some degree. This is a really weak, I don't know. I don't really like the volume here coming back, but I don't mind it coming low. It's not that. It's just the buy up is strange. Anyways, everything's where it should be though. Like if I were to map this out, I would have been like, oh, this could happen as long as it holds this creek, right? The middle cross and then come up and over. That's pretty typical AMC breakout, really any stock, but yeah, not horrible. So when we look at this, I still think very likely gonna see 4s and maybe up to 450 next week. It could be that soon. Even if it comes down low to like 330. I'm not convinced that this is 100% convinced that this is like impossible. It can't come all the way back down or hit that gap. That certainly could happen, but at this point, I think what makes more sense is to rebound regardless if you're going to go down again later or you're going to break out and go up. Now, GME, a bit of a different story here, and I'm going to click on Apple because I'm still in a trade on Apple, and that's a whole conversation. Guys are like, what? You entered a trade on Apple? Yeah, I did. And it's strange. It's been like a roller coaster already. So there's a battle of all kinds of stuff on there. I'm still up 5% of my calls, but it's funny how the market traveled last night and into today, and the value that's been lost and gained and then lost again. It's an interesting story. Anyways, so when we look at GME, so remember the big picture here, right? The big picture is that this historically, I know there's a lot of nonsense on this chart. I get it, but the main lines are there. Those are the ones you want to focus on, the big thick ones, right, that are going up and down. This is a very straightforward way of kind of understanding it, and I think sometimes that's for the best. Is just remember, like, all this starts with big picture analysis and goes smaller, not the other way around. And we often will look at like a 4-hour or a 2-hour, which is good, but we also have to remember like to do that on the bigger scales. And so the big thing about GME that I think it's just a really quick refresh so we remember kind of what's going on here while I'm cleaning up my chart. I'll show you the big picture, is that when this broke out, it came back to this cat ear wave from like way back. And this is a really long-term build out, right? So this becomes a sort of spring into an SOS. Even if it's a distribution and it later comes way down or something, for now, there's not really any reason to be overly skeptical. I think that it's pretty obvious that most of the market wants this, or I say most of your market, I mean like hedge fundy kind of types, probably want to see this crumble at some point. It's become the poster child for like market anarchy, you know, or whatever that people want to describe it as. The hedge funds always make it into some like cult type thing, you know, like, oh, it's just this group of people who just don't know how to trade and blah, 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 blah. The reason I'm saying that is because if you look at the overall moves here, there's definitely more of that U shape, right, than that kind of rounded top. That definitely, to me, indicates a desire or an attempt to try to sell it low and then build back out. But they've been largely unsuccessful in that. So these could be seen as massive upthrust moments right now that are attempting to kind of drive back down through the ceiling, aka the floor at this point, which is around 1050, okay? So when you look at that big picture, you also know that it assumed a wave here, right? And that wave currently is being tested, and there's a middle of the wave right here, and we already hit it, and that was at $44 last May. And in order for us to get there again, we would be climbing as the crow flies to about $52. This went higher, I know. I said 44, but that's really where the check was. At this point, it would have to come back above $40 to really check that area. So a lot of the analysis that I've been doing is based on that, which is that 43 zone, which is where that supply starts here. That's the ceiling that was built out a long time ago and back in 2021. That area becomes a very critical place to either break or, you know, make the stock, because you have to have that move above with support in order to continue. It's pretty straightforward. If you look at the ranges here, the range would be defined maybe loosely as like 40 up to like 85. Arguably, you could say, well, the range is really like 65 down to 45 or something. I mean, yeah, there's different areas. This was all distribution. I get it. But the point is, you can't advance here unless you have that break above. Now, I think most of this has been gearing up for that break potentially, right? But it didn't follow through back in December, which is where we were thinking that might happen. The first part of the wave was pretty spot on. So it came down, hit that creek top, rebuilt out, pushed up, hit exactly where we thought it was kind of going to hit, but then it did not make an advancement past $34, $33 to $34. And that's an issue because, again, when you look back at these, you can see this was a distribution zone from about 29 up to 34. And I think beyond that, you don't really see any resistance until 40. So it's an important level to break, and it's very clear that the market took hold of that and sold off at 34, and now we're backing up, and it's a deep retracement. So instead of going, I have it coming down pretty low right there, but instead of going up to, and I'm going to delete this, advance here, and which would have given you this extra bump, and it did not. Instead of advancing here, it found rejection here and then headed back down. And so at this point, you're looking at, from a bigger picture, at a potentially just simple retracement question. Like, well, if we go back down, like, where does it go? I think the best way was probably to measure from where it came back during that breakout, and checked for support on the weekly here, maybe around 2190. I'd have to look on like a daily to see if that even makes sense. It may be a little bit lower than that, maybe over here at like 2150. Regardless, it does put you in a situation where you see the top of the blue zone that I've got here at 26 certainly seems right. 26 to about 2550 definitely seems correct in terms of a golden pocket retracement, where right now we're kind of sitting at a little bit closer to the 0.5 retracement here up around 2750. So it would make sense, given that this was marked off on the way up on December 2nd, that this is the general area we might come back to. When I did the smaller, shorter term analysis on this, my assumption was that it was going to come back to this area right here, around 2570. I don't think that I was wrong about that. I think I was right about that. And I had some doubts that it was going to do that. It didn't ever get quite there. You might say, well, it didn't get there yet, Booksy. Yeah, you never know. Never say never. Careful what you wish for kind of thing. Because this is certainly a possible bottom as it's trying to advance right now. I'm going to ignore this lower creek for a second so you can see it a little bit better. Certainly it could be trying to advance right now, but it's also very possible that this is like an ear too, right? Why would you say that? Because again, looking at where these supports are, where that sell-off happened, to me anyways, it's like, yeah, maybe that this is where the breakdown happened. This is an attempt at ear two. So it's like basically like this. It's really ugly, right? Could it hold? Maybe. One of the bigger concerns I had when this came down was that this dropped low. Again, could be a spring. Yeah. So it's a simple question, just like AMC, of holding a higher low at this point and then not dropping back beneath this creek again, which it's been prone to do. I had marked off at some point 2762 because it was acting like a support and resistance. And right now we're sitting beneath it. So you can see my concern is that this still has a potential to come low. Again, like AMC, it could drop. It wouldn't kill it by any means. It may seem like a really bad thing, but it would not necessarily be horrible because in the end, this is pretty normal, like to see this kind of a flush and then hit that low and go. If it doesn't go there, did this come low enough? I don't know. My answer is not going to be your answer, because my answer is that no, I don't think it came low enough. But then again, who knows, if there was enough demand, maybe there's not going to be an easy push down. I don't know. I don't think it came low enough. I think it was trying to get back down to this lower pocket between 2640 and 2560. I don't think it got there. So I'm seeing it still as I did last week, which is like, yeah, you could have an up thrust here and then potentially try to come low again. I didn't think it would take that long. At first I drew it out longer and then I drew it shorter. But what that would look like is it would basically be like, oh, it breaks out, it comes back up, and then it comes down again. And then it goes over here and does like the same thing you're expecting. It's nearly not that different than what I already drew. It's just that this would be over here, right? So either way, that would make sense to me. So whether it advances from where it is currently and breaks out and holds, how would you know? Right here, it's not complicated. You can move this over. You can see the difference. This is no different. It's just moved over to the side. These levels still have to be met. So like I'm not in a position right now where I'm like bearish, but I certainly see a possibility for that upthrust to aid in a downward motion. And this particular creek that I have on the screen would probably be used if that happens. Yeah, as like a a ramp up and then come back through it, wrap itself around 2765, which is acting as what, well, it's acting as a kind of middle ground support, right? So a ramp to, let's just say, 2950 could be followed by a drop down to 2580, and that's pretty darn close, give or take. Anytime these kind of wraparounds are created, you should be, in my mind, I'm always thinking about potential flushes, because anytime this is generated, it's almost always like there's almost always a risk that you're going to start like doing massive flushes. You've already done one here, 1, 2. I think you're going to do potentially another one, widening it out even more. So there's one right there. It'd be really easy to kind of flush it back up and then back down again and get that second flush to make it bigger, right? The double, 1, 2, down again. So while it might be possible that this just advances and goes, for GME anyways, I still have in mind not a bearish outlook, but just a much more pragmatic, like I don't necessarily think we hit the lows we need to hit. To me anyways, it looks very possible that this is not done, with downside. And I could definitely see this break out and then come back down again and hit a lower low using this 2760 as a potential middle. Again, how will you know if that happens? So on and so forth. You would know based on whether or not this area right here holds. If it holds, then it's likely going to be a situation where you could see another advancement. It's pretty straightforward, right? What that is. Again, not that complicated. It's pretty straightforward. So I think there's a real nice reliability to GME's chart this last year or so, and I've been finding it to be easier to read, I suppose, than AMC at times. Just more straightforward, I suppose, is the better word. To me, this is very, 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 very logical that this is where this would take place, and I don't even think that necessarily hits that creek and checks it. It come up pretty high. And this seems very straightforward to me. Yep. So this also comes back and meets some other expectations that I have, and I don't want to get too deep into that. But this would be a really adequate bottom if this happens on GME. Okay? And I think it's geared up. I mean, you can see, like, this is the 2 hour. It's definitely low. It definitely looks like a place where you'd be like, oh, I should be buying it. It's oversold. But just like AMC, a lot of times it does like a double dip. And a lot of times when it does that double dip, it tries to come back down. It's not always successful. It depends on the time frame, so on and so forth. But certainly it's a possibility here. So one of two things. Both would be fairly straightforward, and probably be determined by that like 2880 area, that top area, to determine whether or not that holds or doesn't hold, that kind of thing. Okay? All right, Matthew. You can express yourself without getting fighty. Fighty? You're a pansy too, Booksy. Maybe. martial arts taught me how to fight, and I'm getting better and better every time I go. But at the same time, it also taught me that if you're in a fight, you've already both lost. Like, there's definitely ways of avoiding fights in the world. And martial arts is definitely something that I feel is good for everybody. But the concepts of why you're in a fight is kind of ridiculous. I understand your frustration. So what's the problem? It says I have 60,000 in share advance 6, ADV 6. Is that what you're saying? AMC average 6. Oh, no, you're fine, dude. Matthew's like, no, I'm not. Look, it totally depends on what happens very, very soon. But I'm going to say, like, right now, this is not going to be comforting to you because I'm thinking about potentially coming back down. And it's easy for me to sit here and say, like, hey, man, you have everything that you need, right? If you're at $6 average to get out of this trade within the next year, and I know it's not a very big comfort, but you do. And I think that that's important to recognize is like, yeah, it stinks right now, but you're not in like a really bad spot. You're really not. When we look at this big picture, I think this wave down is pretty self-explanatory. If this breaks up and holds right here, there's a really strong chance it's going to 635. And then there's a really strong chance after that it's going to go way beyond. So I'm not positive that this is exactly what you're going to see. But if this 50-50s even, it's going to go to 12, which is back at the top. Is that as high as you want it to go? No. But like, I don't think this is going to stay low forever. It's not fun to be stuck in a trade. I mean, it's okay. He's allowed to be angry. I didn't say that. I mean, I think that people should be allowed to feel whatever they want to feel. But, like, he's probably got good reason he's angry. No, I wouldn't say that. Yano. I thought you were going to say Yanni. Remember Yanni? That guy was like a hippie. I don't know if I agree. I think that people get mad. Sometimes they get upset. They say things they don't mean to say or do things they don't really mean to do. I think that everybody's at different places when it comes to managing emotions. And I'm no different. There's some things that like don't set me off at all. And I'm like, people are like, oh, you're so patient. And then there's other things that I'm like, I get mad for like no reason. Like, it doesn't make any sense to me, And I'm still trying to figure out, like, why am I actually angry? So that I can, work through it. So you use, like, whatever you can, coping skills to work through it. But, like, it's totally okay if someone comes in here and they're mad. I just don't want him to, like, take it out on other people. That's different. Remember, like, wasted memories? The same thing I said to him. It was like, look, man, you can be upset all you want. No one's upset that you're upset. Like, I'm not mad that he was upset. I'm not mad that he's grumpy about the price. That's his business. If he's grumpy about it, he's grumpy about it. And he may have really good reason for it. But taking that out on other people is where it becomes now you're involving someone else in, yes, what would be seen as like a personal attitude. That's where things get different. So, yes, that's true. So I'm a professional saying that 99% of anyone who bought and held positions in AMC has experienced a significant and the numbers on the screen disappearing. Yeah. Because it's not possible at this point. If you bought and held in the last 3 years, you've lost money because I mean, like the stock has come down like 90 some odd percent. Yeah, maybe you just need some breakfast. That's also a good point. He may not even be here anymore. He may have left. But sometimes when I talk to people, it sounds patronizing or something. I'm not trying to be like that. It just sounds that way. So he may have felt like, I don't want to get talked down to by some random dude. I'm leaving. I'm pissed. And that's fine. That's his choice. Anyways, I'm not going to sit here and lecture somebody on how to be. But at the same time, I don't have to tolerate it either if it's like, hey man, check yourself, and then they don't check themselves. Or hey lady, check yourself, because it could be a lady, I guess. Hey person, whatever. I don't know. Check yourself, and then they don't check themselves. It's like, okay, well, that sucks, because now I have to like use the powers that I have. Such a dork, man. I'm a dork. I'm a really big dork. Yeah, so let's clarify, because there's arguments about what's on my chart, and I totally get why, because my charts can be super messy and hard to read, and it's hard without me sitting here telling you what I think. So here's what I think. And I'll do a little simpler version of it right here. So I've already got what I want on the chart here. There's 3 creeks. I'm going to make them all yellow. But I'm going to make this one, maybe I won't make this one yellow because we've already passed over. I'll make this one blue, okay? So you can see like right now, we've advanced through number 1. It's very possible this needs to go back to like 330 before trying to advance over number 2. That retracement is kind of like built into this if it cannot re-advance back over 353. So this is not the same chart we were looking at earlier. That was this one right here. Obviously, if you can't advance right now, then you're in a bit of a pickle because, and if you guys know what a pickle is, that's a baseball term for being stuck between bases. It just means you're in a bad situation. Because this right here, advancing up to like 355 and then coming back down, doesn't really look too hot. I mean, it could easily correct, but normally that's a trap for bulls, not a trap for bears. Normally. So the flattening here is odd. Could be that this is forming a bit of a head and shoulder, so it makes it uncomfortable. We've talked about this a number of times. When you push high and then you have a high and a low, you're establishing like essentially like a potential stopping point, right? Once you establish that high and low, the next thing that needs to happen is a higher low, and then you need to start trying to advance. That hasn't happened yet, right? What we're doing is we're kind of consolidating sideways. And a consolidation sideways after coming down could not be misinterpreted as just a possible bullish option. It has to be left open for the possibility that there's a bearish flag there. And that's what I'm saying. It's basically like a flagging action in LSPY here. So right now, what happened this morning, going backwards, and it looks like it's trying to correct it, okay? Hasn't quite gotten there yet. But you got to be careful because this could be a double up thrust, like a cat ear kind of thing, right? Like 1, back up, 2. So what happened is it went above this creek and it tried to, what we would say is raise the creek. It's a nice metaphor because you think about water and you're like, yeah, it's cool, man. It's like water. The creek is rising. Yes. The high creates a higher resistance here. It's pushed. But when it came back down, it did not hold the previous creek support as support. Instead, it kind of bled through it. So what I said is that in order for this to turn around, it has to come back above this creek, which it's trying to do right now. It has to hold here, and then it needs to make an advancement. That would confirm this higher low here, this support here, would then confirm, and then a higher resistance, the possibility that this is actually fine, and it's going to continue. So at the end of the day, what needs to happen is it needs to make a higher high, and then it needs to ultimately come back above 358. Yesterday, I had doodled something similar to this where I had said like, well, really, like, this could come up and kind of form out all week, and that could be like the whole week, like this. This is essentially what I drew like Monday or whatever it was, yesterday, I guess. We didn't have stock trading on Monday. Was that, yeah, you could have like a reaction here that does become bullish, but it would probably build out. I don't think it's super likely it goes right now. Is it impossible? No, of course not, guys. But is it like 100% guarantee that it's going to rocket right this second? No. I think the issue is that as it stands, this flattening that happens on AMC tends to be bearish. So even though, yes, it looks like it's holding, it's entirely possible that this does like a distributive action and then comes back down. We would just see that as a cat ear. It'd be really simple in the end. Learning how to anticipate a possible problem here is part of the reason why I stress the same things over and over and over again, because I know like what this is and what it isn't. And what hasn't happened yet is we haven't jumped that last creek. So even if this holds, you have that issue that this needs to come above, right? And if it does not, then it just looks like what we've always seen as like the kitty cat ears, right? Has that happened yet? No. So what I stressed this morning was 345. If 345 breaks, right, and that would be like the same over here, doesn't make a difference when it happens. If 345 breaks, this essentially just turns into a big head and shoulder, and you come back down to 330, and that's that. And on the big picture, like we just saw, is that the end of the world? No. It's probably a 786 retracement. You know, I don't even think I've checked that, but we could check it. It's probably like a 786 retracement on this bigger move. And ultimately, what was breached was this other kind of an invisible creek, which really is more of like the middle of a wave here. And that usually gets hit before it takes off. It comes up above it. It could be that this is the hit, but I think it hasn't hit it necessarily. It's debatable. So that could come down to 330 and hit it. And it would look maybe not great at first glance, but that's just a simple retracement, right? So what I'm saying is like today is pretty important for that. It would not surprise me if this hit down to like 330 and then advanced right here. And then this becomes like a wave 3. And I don't know if impulse wave is necessarily the most appropriate, but certainly possible after that we go up to 384. This gives us our triangulation fairly succinctly right here going into Friday the 31st. Potentially again, if this is like more long-winded and it triangulates that way. Usually this is a little bit like, early. That this comes up, could even hold 4 by Friday, right? All this could be very fast, could be a little slower. Point is it's there. The chop is there, right? For right now, that's a pretty decent way of looking at this. As in terms of like, what happens if it goes down? I think this is probable if it goes down. If it doesn't go down, then it's just going to break back out above 365, which is why on this chart I said, hey man, you get above 350 here, up to 355, you hold that level, hence the numbers on the screen, then you should see it build support out and come across this creek at 365. Once that happens, you have to deal with this this other trend, right? But this becomes like a wave, essentially, a wave center. And then we get back into the basics of like, okay, then where is the trajectory? The trajectory is super steep here. It followed it out, it left it behind. If this thing follows through to find its trajectory, it's going to be like a massive straight up kind of move at some point. It's probably going to hit pretty soon. Like I was saying, maybe by next week, it's going to be back up here. This trajectory is not lost. It's just abandoned for now. If this ends up building down and it boils back out and pops, you're going to get a nice big move all the way up to like 430. So the bullish side of this is not particularly bullish at first, maybe, it's like not quite like super, super strong bullish, but it's there, it's a good move. And potentially this could run up pretty high. We don't know for a fact where exactly it might stop. It's entirely possible if it follows through, it could go all the way to like 440, 448, you know, something like that. I do think at that point it's probably going to come back down. There's a lot of reasons I think that that's likely. And I think it's going to use this channel line here to build out what will appear to be either kind of a final move, like a final backup, and or a cat ear. That's typically what we see, is that the channel is then later used, it overextends. So you see how this like extension below the channel, I guess this is hard to see because of my bad drawings, but I wish there was a better way to like describe this. So if you're trying to make if you're trying to make an advancement, where do you need to come back above? The answer is right here. You have to come back above 440. 440 was dropped. That was a big deal when it dropped. It's still a big deal. Okay. 440 intersects some of these outer creeks, right? Way up top, these parallels over here in late January. This region right here, there's a reason why I have it like marked off with all kinds of crap, because there's a lot going on here. There's also a triangulation here on the cat ears that leads back to 440 by beginning of February. So I might, if anything, I might have this like a little bit too like Willy Wonka here with all these colors and stuff. But it's there. Like the triangulations that you're looking for are right there. They're already set up. And this is why I think there's a high probability that we're going to come back up right in this pocket and check this top, because we left this stuff behind. It doesn't expire later, it expires sooner. And I think that triangulation is pretty darn critical, right? When you look at the parallel structures that are set up, that have been applied here, it's pretty critical to like a breakout and or a breakdown. Even this, which is a longer term kind of ice back here, is generating that upward motion right into this pocket here. So like everything is kind of waving around right now. We're getting this kind of bend, this bow, right? Waving around. Does this aid, you would say, in the analysis that it could have this massive move up here? Yes, because a wave 3 is probably going to be about that far. I'm going to go check it in a second, and we're going to test this idea. But if it stops now, is it enough? I don't know, maybe. If it drops down, is it better? I don't know, maybe. We'll check it, okay? But right now what I'm saying is that looks really sensible, because typically if we create a wave, what we're doing is we're generating like an upward channel. This is the way that the stock is moving, the direction of movement. It's nothing magical about it. It's just this way, right? We're going this way. But we're pushing right now away from what would be considered like a center mark. Yeah? And we've also broken down through the trend. But what's interesting is in retrospect, if you go back and you look at times where this has happened on a wave and it's expanded, usually that expansion lends itself at a later time to coming back through in like a 50-50 manner to what would be considered like the center mark on that wave. That's exactly where you see the cat ears try to have their interaction as well. So I don't have like a great drawing of this right now. It's not like way off, but it should be like 46.7. There we go. That's where it should be. And this should be 46.7. Maybe I need to redraw this to have that on there. There. Okay. So that particular wave, let's get rid of some of this other stuff we don't really need. So that particular wave right now does look right. So what it would tell me is that if you broke out right now, that you'd probably hit close to 440, but not quite. I mean, it depends on how long it gets there. But if it, like, let's say it left right now and went up and it broke above right here, 390, I think you'd get all the way to 440. So you see how we're measuring the move? Now, if we were to go down to 330, let's say we hit 330 and we measure to that middle, that gives us a lot more bang for your buck. It doesn't mean it's going to go to 460, but it's like more like 450. Do I have 450 on the chart? Yeah, right here. It's the exact same level. All right, so what we're talking about right now, we just talked about it on GME. Remember we just talked about how like if this is like a cat ear that's waving around, then it generates this kind of centrifuge, center area of pivoting, right? That you can now generate like a channel. This basically becomes like the middle of a new channel or a middle of a new trading range. See this concept right here? It's the same concept that I'm applying on AMC here. How so? Because remember back when this came down, what did it do? Well, it generated a middle. Where is the middle? It's at $4. You see this? This built out a support right here at like 405. And then it dropped from 405 and then it came back up and it sold off at 405. It's the exact same concept. So now you're building like a middle here that allows you to come back up to the middle at a later time. That's why I think this trade is fairly straightforward. From my point of view, I think, yeah, it could go lower right now. It could make another low down to like 330. Technically, it could come down to 315 even. It could make a lower low if it wants to have a sign of weakness here. It's very possible. There's two targets, right? I didn't talk about the lower one. I talked about 330, but I think 330 is fine. And then at that point, you're ready to go back up and retest these areas that were marked off in the middle. And it essentially becomes this big up flush, down flush, which we've already talked about. That move, remember around that channel? You guys are like, nope. We drew a channel down. And I was like, oh, it came up this far above the channel. It might go down that far below the channel. And then it did lower on. This is exactly the same thing we're talking about right here, but we're talking about it in reverse. So it came down this far below the channel. It might come up that far above the channel. Does that make sense? It should be thought of as like a core middle, and then you're pushing away from that core middle and causing a major reaction. I don't know how else to describe it. I like the ball in the water analogy. I think it's the easiest one. But it's a really simple, straightforward way of understanding how a stock might move according to like the way the liquidity is going in terms of being grabbed and where it's positioning itself. If the 50-50 wasn't there, I might not consider it. But it's there. And it's targeting the targets that I already thought it was going to target. So it's kind of like, yeah, either way, it's fine. So if it breaks out now at 350, it's fine. It just has to pass over 395, and it's probably going to go all the way to 450 or 440s, excuse me. If it goes lower, I think there's a better chance that we might get a bigger push up. Yeah, but then, if this is a 5 wave, it doesn't really give you a sense of comfort, because then it just makes it feel like, well, even if this does go up on the wave 5 here, it's only going to go up similar to a wave 1. And that's correct. That's usually right. It's not always the case. But if this is an impulse, then sure, the next wave may only go up to 475. The key is, when does that happen, right? The key is like, how does this build out? If it happens in the right spot, then there's a potential here, I think, and they think this is where we really meet this trend right here. I think we meet the first one here and the second one here. And if this happens, I think that's where you have a pretty decent chance of potentially having like a macro run, like a big picture run. Is it mad science? I don't know, man. Maybe a little bit. But I think most of this is just simple, like geometric mathematics. It's not really complex in that way. It's just the way it's structured. It's a visual way of understanding chart dynamics. You have to keep in mind that those visuals have to be informed by follow through. They have to be informed by volume. So it doesn't matter if your visuals are correct. If the volume's not there, it's not a sure thing, right? if there's no follow through, it's not a sure thing. See, this lends itself pretty well to like a 5-wave schematic. It's basically perfect. I think this is the best way to kind of interpret it. Now, if for whatever reason we stop below here at like 390, then I think it changes, because I think the dynamic then becomes we're in a range. So I haven't even really talked about sideways here, but it would basically be like right here at 390. If there's going to be a range, like that's where it would end up being, is like 390 down to whatever bottom we tend to make right here, maybe 340, 330. Like that ends up becoming like a new range. It makes sense to me, again, for liquidity purposes, that we would trade this area right here, that we would basically wrap around the previous top middle. Like we're basically just doing this if we do that, right? And that makes sense. This is right where you would expect there to be trading, because it wasn't traded before. It's really quite sensible, you know, if that ends up becoming a range. So the only real danger here in all this predictive stuff that you might call nonsense until it happens is that this could technically just stop here at like 380s up to 390s and then come back down. In which case, who knows? This could be an auto reaction with a phase B top. Maybe we have a spring later, and then we rock it. It wouldn't be that different from what we were anticipating anyways, which was potentially something like this, where it comes up, stops. This is kind of what I had early on. This is an older chart, but this is like essentially the same idea. Like comes up, stops around 4s, comes back down. I don't know if it comes that low, but you get the point. That's possible here if they don't want to take it all the way up. I would be a little bit concerned, I suppose, if that happens, but it is what it is. I don't have that on the chart. If that ends up happening, I'm going to have to be like, what, I really did talk about it. You know me. You get all like weird and defensive about it. Like, oh, I really did talk about that. I did. I've talked about it a lot, because really that would be like the floor. So if it hits 390 up to 4, it could stop there and then generate like a new trend beneath like 330 up to like $4 to trade just that. That could be the finale, you know. I mean, it's very possible. So I thought this was the finale. Look, man, like it is what it is. If this comes up and it stops short and does not rise, it doesn't hold, it doesn't break this creek, then you're very likely going to come back down. And at that point, you're just waiting to see if it makes a new low. And it could very well be that it doesn't ever really come back below let's just say like 292 or whatever. It fills the gap on earnings and then it goes. I don't know. Either way, that's kind of what we've been talking about, isn't it? For the last like 2 weeks, is just this idea that there could be a second ear here. The question is just how high does that ear go? Either way, right? So I think a lower intensity ear might actually be better if it's going to do that, because a lower intensity ear probably wouldn't dump as low. It may only come down and fill the gap, right? So if we're looking at it from that point of view, probably could do a simple measurement and just see where that should be. So I'm going to make a mark at like 291, assuming that it comes that low. And then we'll just take a 50-50 from like 291 up to, I think what we're defining as the middle right now is 350. I think that's why we're chopping around it a lot. So I'm going to do my best to kind of put it at 350. So this to me supports the same idea, that they would come up to like 420, that they would come up to this region, because that actually makes sense. So if 350 ends up being this kind of anchor, you certainly could see how that might play into it, if that's a desire from operators to go up wrap around 350. You would take it up to like 420, 430, and then take it down to 291. Boom, boom, right? Wrap around, so to speak. what's after the finale is you head back up towards 12 and then possibly 20. It's not complicated. Like what we've done, I mean, it is and it isn't. Like what we've done here is actually pretty straightforward. When you zoom out and you look at the big picture, it's not really as complicated as all this. This is short-term stuff for determining like a wave top. All this is right here is a reactive move back up right now. In order for this to continue, it has to wave up far enough to get the breakout here around 450. If 450 happens, there's pretty much no reason that it wouldn't go all the way up to 650, in my opinion. Like, I think if 450 happens, it's almost a sure bet it's going to fly. And at that point, you're just taking off. But if it falls short of that or it distributes along this top, I think it's very likely you're going to come back down and we're going to make more of a true second bottom. And this is like a falling cat ear kind of deal. 1, 2, with this is the M cross. And this is the wave top. It's exactly what we've always talked about. This is the middle. This is the projection of the middle going outward. You would expect the next wave to come back up. It's a rotational symmetry. It's a cat ear that's falling, so on and so forth. All these different descriptions for the same thing. You would expect it to stop there and potentially come back down or try to come back down again. That's where I think the gap fill becomes more likely. When we first came down, that's what I was saying is like we might not get the gap fill. If it doesn't get the gap fill right away, it could bounce off the top of the gap. And everybody kind of like forgot that when it happened. They're like, oh, we're just not going to gap fill. And I'm like, no, that's not what I personally believe anyways. I believe that it could have bounced off the top of the gap, come up to get more sellers, and then dump through to try to get to the gap. And this is a way of kind of generating enough energy, so to speak, to punch through that and get down there to that liquidity. Not hard and fast, just descriptive of like how this typically moves, right? And then long term, we know that this has some serious potential for some serious low. As I don't want that to happen, but it's totally possible, okay? And when you look at this big picture, I think this is where maybe we sometimes lose sight of what we've been talking about all along. When this first started, there's that wave, principle in action, I guess. Maybe we should be using that, right? Hey, waved up, Booksy. Yeah, it did. This is that double flush idea. We talked about that before, that this could be potentially like a double flush, right? It comes low. That's why 226 is so appealing to me on the whole. Does it have to? No. And we did several different interpretations of this. I did one on stream. But one of the things I talked about a lot was this idea that this is just a wave down, and what we're doing now is we're really just reacting potentially off the top of that wave. And this is essentially like the same diagram I've been drawing for the last 2 years. It's no different. It's essentially like the macro. If you look at it judiciously, you're like, oh yeah, it is. That's the big picture, isn't it? Yes, it is. It's the exact same thing. Potentially. Now, it might make you worried because you might think, well, that garbage, that means we're definitely going to come down to 220s. Yes and no. There's certainly evidence enough to suggest that, yeah, that typically happens. That happens quite a bit on AMC, especially if it's going to sell down. What's interesting is that sometimes when that doesn't happen, it ends up being like the most bullish outcome. Because if this does not make a lower low and then proceeds to break above said creek here, right? Then what almost always happens is that this then pretty much explodes to the upside and you get a really nice pop. Usually, it's fairly substantial. Not always. In some ways, this is where we might expect there to be this kind of move here, although I know this is kind of a different story because of the shift. But in a lot of ways, that's really where that move should take place. that reactive move for all this buy-in for these shorts or covering positions or whatever. It should be like right there, right? Roughly, or from this bottom, wherever that bottom is here. And I think it's going to lead us back to like more than likely like that 2190 or whatever it was. I don't remember the number, but up here. Maybe it was like 1960. I don't know. It's going to go back to that gap. Once it breaks out. Okay. And there's all kinds of weird issues that we can kind of debate. Like one thing I might do is suggest that we probably shouldn't be using that full thing. After looking at the, it would be more like this. After looking at the nature of what we saw back here in the shift, I think there's some weird things that happened. There's all kinds of stuff we can do. I don't want to get into that right now. All right, but the point is like big picture, because like there's again half a dozen different ways to kind of interpret that. Point is that big picture, we could be in store for a pop here, and if that happens, then guess what? Look at where you are. You're above the creek, the first creek. What's interesting about the way it's set up now is it's literally fanned. The first and the second creek have quite literally given us a pocket for that potential SOS to happen. So the first is the August top to this July top. That's the more recent one, right? And the second is from the original top, all-time top, to the August top. And what's pretty interesting is if you look at the triangulation of where that gap fill is, it certainly looks like another potential, well, looks almost like another April-May kind of move. That's a year out. That's, if you remember what happened back here, this was 10 months from the first bottom to the final bottom and then the breakout. There's like a 10-month period. It looks like 310 days. And you look at where we are now, look at where that 10-month period is. It's like coming up right around near this earnings. It's essentially right on earnings. It's on February 21st. I'm sorry, LSX. Are you listening? How is that magic to you? It's not magic. Like, you do realize this setup is essentially the exact same setup we had here. And that this ended up going magically, as you describe it, from 11 or whatever dollars up to, it was like $2 up to $72. There's nothing magical about it. This was an established trend that the bulls set way back here. And it abandoned that trend to get an accumulation that then pumped it up to distribute. That's not magic. That's just the science of charting. And I don't know, man. That comment just really bugs me. It's super like messed up, dude. Look at this. How is that like any different? You really don't think it's going to come back up here and check these levels? Because in reality, this is only this $20 marker. This $20 marker, if you think that's somehow like a magical number, this is only like the middle of what used to be like the 2021 range. This isn't some like amazing value for AMC. Like, you do realize that valuation is still proportional, right? That's a big deal. You're only saying it's worth as much as it was back here during the COVID era. Is that somehow like a magical number? No. That's nothing. That's nothing. And I've said repeatedly that I don't necessarily think it comes above what's now like $80. I'm not offended. I'm just annoyed. Because I've like talked about this for like a year, and it's like, what do you mean magically? The market magically decides? All right. It's called cause and effect. All right. When you look at how long a range is and then you look at the effect that it has, it's proportional. And there's people that have defined it using what's called point and figure charts. There's other people that define it in other ways. But like the Fibonacci extension, for example, the Elliott wave principles of like wave 1, wave 3, wave 5. Why are those things even there? They're not magical. They're based on statistical probability that something happens because of something else happening. It's called cause and effect. This has a 10-month to almost a year-long cause. This has been going sideways for nearly a year. You know what happened to Tesla when it went sideways for many, many years? It had a massive markup. When you go sideways, like we did back here for 8 or 9 months, you can have massive moves to the upside or downside. It's cause and effect. That's the way the market works. I think that we get so bound up in this idea that it's not real, supply and demand isn't real, that we somehow think that it doesn't apply to something like AMC and that there's nothing really going on here. Like this is just all imaginary stuff that then is just imaginary up markings up. Like, no. If this is an accumulation period, it's taking place over the course of nearly a year. That is a long time to buy shares. That is a long time to accumulate and shake out people. When that moves, it has an effect to it. The science of what I do, and I would call it science because I test my ideas and I test them against myself and I scrutinize myself. The science of these ideas is very simple, that you are essentially looking at similar situations to see what the cause and effect was. And we've done so many different examples of this at this point over the last few years. Like so many examples of this exact same diagram. Why? Because it's a waveform diagram. Why? Because it's layering up on creeks. It is probably one of the best ones that you can possibly memorize because, honest to goodness, it essentially defines what becomes a Wyckoff accumulation or a Wyckoff distribution. It's essential. Like, it gives you the exact places that you would need to know, like, this is where you're going to go, right? So we're watching this right now. It's like, this is not accidental. This is not magical. It's just simply the way that it is. The way that this traveled through this range down here when it dipped low and then has this massive reaction back up, it's not magical to me that this is then becomes like a 50-50 around what's established for again, years as a center liquidity mark. That's what this is. This isn't magical. This is a massive waveform. It came down and accumulated for a long time. It comes up and distributes. What else is the market except waves? That's all these are. Distribution is often just as long, if not longer, because this is all distribution of the shares that were purchased here. Because the markup period itself is short, this is where all the buying traditionally happens. More of the buying happens in accumulation on the markup than it does, believe it or not, at least in the early phases of the markup. Selling begins here at the end. You can see here the selling pressure at the end, the high volume into this top. This is your distribution period. It's still significant length. This was like several months, like 4 months, 5 months, and then it still takes a long time. These are secondary distribution actions over here. This is pumping it back up to sell again high, pumping it back up to sell again high. So really the distribution takes place over the upper, I would say the upper 25% here of this kind of macro range, right? Which makes sense because if you look backwards, this would make perfect sense that this is where you're going to sell off when you come back up. All this is like sell off. So distribution takes just as long. Cause and effect. You're also building up a cause for downside when you're distributing, right? So this all becomes part of that distribution phase right here. This is just another accumulation, so to speak, for, frankly, for shorts. And I think it's possible that some people change their mind here, but this is just another one of those LPSs, like just like this one right here. It's no different. It's the middle. It's the middle of the cat ears. We were talking about that here. The middle of the cat ears defines kind of the center point for waves. And we were just talking about that on the short term as well, right? This is the center mark of the cat ears here. It's kind of slow and down. These things are defining liquidity zones, right, for your chart so that you have anchors, because the market likes high liquidity. So you're going to have these places where more people are trading. It's easier to trade shares. You trade for a long period of time because there's that much demand here. So the idea of it taking so long is that, well, there was a lot of demand down here at like this price. I mean, again, looking at the historical numbers, this is probably closer to like $1 than people think it is when we talk about value. It really is. This is like $1.50 or something down here. I mean, it's low. This is a low stock. So if you think that this is ever going to come back to 2020 levels, this is a great buy. Why not? But there's a huge amount of volume here. I mean, this is historically like a ton of volume over this period of time. So I don't question that as much as I question the idea that you could somehow go up without that time spent. You know? So right now I'm looking at this, I'm just staring at it. I'm like, yeah, it's pretty much right where you expect it to be. This daily 180 was jumped in 2021, took off, came back down to hit the top of it, blah, 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 blah. When I look at the big picture, the problem that I have with this, the only real issue that I find is the shift value. And that's just a question of what you think dynamically is going on with the shift value. Because it would be easy for me to say, well, hey man, you said that this was like the middle. This was like the 50% value in this markup phase, right? Yeah. So why wouldn't this be the new 50% in this bigger structure? Well, it could be if this ends up being like some kind of a huge macro wave back to the upside, and I think it is. But I've already made the argument that ends in February 2026, and I still think it's the same. It hasn't changed. It's just the measurement of where this happened. The issue is this. When you look at that same concept and you think that, okay, so this ends up being like the middle, right? Well, use the shift values. If this is the center mark, and we're going to move up to that center mark only, just like we did here, we moved up to the center mark and built out around it. What does this mean with the shift values? Well, again, this is the benefit of the mathematics of it, which I would call it science. Like I'm doing my best here to be as pinpoint accurate as I can. This to me is like right here. Look at this. This shift value is where it would have been had this not shifted low, which we know is because of that reverse split and the ape stuff. Take that down to where we are now, like presently. So looking at where it's at, you would expect it to come maybe a little bit above as it did in January. Maybe. I'm going to go right to the bottom here. So assuming that it doesn't fill the gap, right, where maybe would it go? Maybe a little bit above right here. But I wouldn't suggest like it's significantly higher. That puts you at around $17 if you drop it down to where we are now. That's the reason why I did the whole thing, was because I was like, hey man, there's something going on here with this gap, basically relating to the previous gap. They essentially used it as a shift value. So yeah, it totally makes sense to me, because if this is correct, you should be coming up, quote unquote, fill this gap. It may not fill it, but it'll get close. You know, I don't know how close it'll get, but it'll get pretty close. So somewhere in the middle there of that gap up here at 46. The problem is that the chart has since shifted down and is operating lower according to the valuation. If I take it back down again, you can see what I mean. It's probably going to go close to $20. This is $17.28. Now, if it fills the gap, the gap's up here at 1960 or 1970. All of that's being built out over a long period of time here. I think there's adequate cause built up for that effect. The other question would be, well, what if it goes down for a spring? Well, I can't really easily illustrate that, but what I could say is that if it went to like even the gap fill, it changes. The gap fill we know is the bottom of this particular move. It really didn't move very far off that bottom and gapped up. It's pretty much right at the bottom here in back in May of that final little position before it moved. If it goes off the bottom and it comes up towards the top, this starts adding some new layers to this because now it goes further, but you have to again measure down a little bit farther to where that gap is. And again, it's pretty much the same because you're technically dropping it, but then expanding it upward. Okay, all of that would tell me that there is in the midst of this a very strong likelihood that this is correct. The question is, when does that happen? Well, so far I've gotten it pretty wrong in terms of timing, but there's also been elements here that I've gotten pretty darn right. Like the reason that this is still interacting with the chart that I have is because I charted it correctly. You know, like there's things about this that I knew were 100% solid. There were other things that I was like, I'm not really sure. And then when we did the chart shift, it changed a lot, right? And we had that somewhere. I don't know. I'd have to find it. But we used the accurate values, and there actually was interesting because it goes backwards to like July 26th, these arcs, instead of straight up. It goes out to like here. Things like that. And we later like used, right, in our interpretation to help understand the particular motions here. To me, even though this this September 13th breakdown was kind of garbage and ultimately didn't make me feel very good because it didn't end up pumping up to 8 something, you know. In the end, like that should be kind of the middle of the structure, regardless of whether it happens or not. In the end, that area right there around the 13th to 16th should be roughly in the middle, which does imply that this is very likely going to be up here by May. Now, what we haven't seen yet, when we can't understand fully, is whether or not it's possible that this goes even sooner. Because technically, does that make sense with other things that are at play here? Well, no. I mean, if you just looked at timing alone, it kind of implies that you would run up at least around earnings. Maybe that's right. You know, maybe this takes that much time to go up there. It's a long time. But we were just talking about it. There seemed to be a lot going on around mid-February, right? And I would suggest that it's sort of both. I don't think it really matters. One might be representation of what we would call like a pivot, where it's intersecting high here. There was early targets. You guys probably don't remember what I'm talking about, but there were multiple targets around February 18th. It really went from January 21st to like February 21st. It was basically the whole month of February. So going backwards in like a full circle here, I'm calmed down now. I've calmed myself down by doing TA. Going full circle here, if you saw something like this happen, this doesn't necessarily mean this timing's way off. It could be that, yeah, this does just go up and it hits like what we think is going to hit at like right around 4 something, right? And it does hold at 4 and then it goes, right? It could be that simple. This is essentially what I've already drawn on the other chart. If that happens, this is still very bullish because it means that it's made what's called a LPS. It's not actually going down for a spring. Instead, it made a higher low and then it's pushing out. It doesn't really change the ultimate target per se, but it does mean that, yeah, potentially you might spend more time accumulating at 450 as opposed to down low in a spring. It's really a liquidity question, right? So in an LPS, you would build out here, which is what my argument is, I guess right now, if I'm going to argue anything. you would build out here and then potentially take off to the upside. Maybe this goes into earnings. I don't know. It could be that quick. I mean, it's very, very possible that this goes into earnings up, right? I don't know. It's whatever. Okay? This area right now for timing is innocuous. It doesn't really make a huge difference to me. But this would essentially be like what we were talking about before is like, oh, well, if you have a bigger swing, you could break out. If you hold these levels, you could break out. It's exactly the same thing I'm talking about right here. This is why this is so critical, this little zone. It is. It's a critical zone. Right? It is. It's important. So when we take a look at this from like that helicopter perspective, and then you come back in, suddenly you realize like this is more than just kind of a bunch of nonsense that Booksy's drawing on a simple wave. Yeah, like it's important to recognize like why that would be significant. You know, if you have like a micro analysis, sure, Booksy, we appreciate that you're diligent, you're trying to do this, but I don't really need all this information. Well, the reason this confirmation would be so important is because of what the implications are here on the big picture. And ultimately, yeah, I think if it can hold here and it breaks out, you're definitely en route for a potential massive move to the upside. Is this giving you enough space to do everything else you need to do? I don't know, maybe not. Does this look like a wave to you? Yeah. I mean, at the end of the day, like that's what we're really talking about here, right? Is like this. You know? Is it going to go all the way up if it does this? What if it doesn't go high enough? I don't know. You know, I don't know all the answers. But what I can say with relative certainty is that makes sense as a wave that breaks back to the upside. This is all push away from that trajectory. But I think that in the end, you know, anybody's guess as to how high. If it doesn't go high enough, it's probably going to stop at like 1380 or something. I mean, there's another zone here that I'm worried about if it goes too soon, maybe about 1380 or something like that. On the other hand, coming down might seem worse to us at first, but if we do have another push up and then we fail and we come back low, even if we just got that gap fill, it's still not bad. Like, this still gives you like an adequate reason to come back up. And then if it goes way lower, it's just a spring. So the question is like, where do you want to trade right now? Like, we know this is probably desirable. We know that 450 area has already been pretty heavily traded, but maybe there's a reason we would come back and trade here. Like, this is definitely a zone that I would consider as a strong possibility for like where this ends. This is sort of like a middle that we just hadn't traded yet. So this also makes sense to me as to like, why are we here? Well, because we didn't trade it, you know. We talked about this a long time ago. I said it was very unlikely that we were going to leave until we tried to trade at least that. And then here's another place that we haven't traded, is down bottom. I mean, it is what it is. You can say that never is going to happen, but like history would be against you. That if you leave that behind, you know, there's no telling. I think the design of this, if it were to come back down, would be to try to trade to a new low. I don't know if they get it or not. I don't know if operators manage to get it or not, but I think that would be the desire here, would be to go test this bottom around 239 and possibly push like slightly below it. And I think it could go down to like 226. That was my argument before, was that I think it hits like 226 or something, and then it comes back up, and then you basically just take off. And that would be by design, because you'd be basically trying to trade this bottom area, which is already there. So all of this lends itself really easily to a simple understanding of like, where are the supply-demand zones at? Where do you think it has to go to break out? Well, nothing here is particularly new under the sun. And not only that, but while we were coming up, these things are being like marked off for us. So if I believe that the markings here on this S-curve down can help me determine where we're going to be in the future, like coming up to like 450, if I think that's true, then, and actually it kind of looks like it would be here, which could make sense. Maybe make even more sense. That 415, that weird 415 drop, maybe defining that bottom, and then the opening value. So if I think that, by the way, I don't think it would matter. I mean, either way, by the way, because like if you came back up, you probably end up trading them again anyways here. So like regardless of what you want to do long term or what you think is more likely long term, you probably would end up trading it anyways, coming back out. Not necessarily a lot, but it would be there in the end. This liquidity shelves that you haven't traded yet. If you can't do it visually, just take your VRVP, put that on, and you'll see the high liquidity zone being right here, and then you can see the low liquidity zones where they start. So right here is the bottom of the liquidity shelf from over there. Right here is just a huge liquidity pocket, and then also a big liquidity pocket. Pretty straightforward. You don't have to use VRVP, but if you want, it's there. So like when I look at this, it's not even really a question mark in my mind. Like I'm pretty sure, regardless of what happens, this has to come up to at least like 390, and then I think potentially it comes up higher. And I think it's by design coming up to see if we can get back above 450. I think it's going to come here, check this out, hold that level, right, and then advance again. And then I think from that point forward, you're at the mercy of who knows. You know, I hate to say you're at the mercy of the operator. We're always at the mercy of the operators in the chart, but I think at that point, it's fairly safe to assume that you won't have an answer until you get there. And I wish that were the case. Not the case, but it is what it is. And there's debate. That's where the debate is right now. All of this is just to say, like, we've been studying this diagram for like this diagram right here for like the last year. The reason that I study it so much is because I find it to be probably the most important waveform structure for a bottom. Like this is essentially like a bottom structure. A long time ago, I did a video about this kind of, a lot of people call it like a W, right? Because of the overall appearance of it. It does have that kind of vibe. But later I found that really was, while that's kind of accurate, it's maybe not descriptive enough because it doesn't really define what's happening. And you could see a W that technically still breaks down. Like we saw one right here, for example. This is a good example of one that is a W shape. It's the same shape. I would call it an M, but whatever. You get the same motions. The problem is what happened after this. It didn't go up. So like there's a lot of little nuances to it. And what it really boils down to is is it jumping a creek? Check. Is it going back to retest that creek? Check. Right? When we look at these kind of big picture analysis, we usually find that there's some pretty simple, straightforward motions that are going on. When you look at the advancement and how it moves, it looks so much like a Wyckoff accumulation with a auto reaction phase B with a spring, and then it reacts, comes back to the floor. And what I find is that this is essentially like where I find like, oh, there's cat ears like here in the middle. The whole thing could read as like a gigantic one, but this is usually where the cat ear typically presents itself the most obviously. Usually this early part when you're doing the LSPY or the preliminary support here, this is where you're defining where a lot of that action takes place later. You see how it anchors itself, whip, 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 whip. So you get that greater momentum around the middle. So this all is a defining feature of this understanding. And then later, of course, you have to get into the SOS, but this is basically like the breakdown for the whole thing. If it's really healthy, you don't get a major sign of weakness here, and when it comes back up, this is usually checked. It's really healthy when it jumps the creek, but that's like a retest of the floor. But yeah, I mean, all of this is very like straightforward. So I look at it and I'm like, this is kind of the bread and butter of a bottom movement on the market. And by the way, on a reversal too, because had you decided to look at this in reverse, you would find that this actually looks just like, it looks just like this, right? Which is nice. Just, again, proof in the pudding, I guess. But it also just looks like a top. Like this looks like a sign of weakness right here, where it's trying to hold something and then it pushes down low. It looks like an SOW, right? We talk about that all the time when we see the sign of weakness. And then it goes up to a UT, and then it tries maybe a UTAD, which doesn't usually work out, and it looks like a cat ear. And then the reverse of this is true as well. And then what we find, and what's kind of interesting, is that a lot of times going backwards, this ends up defining quite readily like where you actually triangulate into the top, because the wave is also building out not just in a bearish way, which is going this direction, like bears are trying to head this way, but it's also building out in like a bullish direction by starting to define a new trend this way. So let me flip it back over. So this is like bearish direction, which is trying to continue whatever downtrend existed back here, right? And then bullish direction, which is trying to reverse it. And this is why it's so critical that when certain things happen, you have to have like higher highs and different pushes. This is why the SOS becomes this like really interesting dynamic in the market, because I find that it typically triangulates pretty darn well with what we expected. Does this make sense of what I'm looking at here? Yeah. This is that top range, right? The defining features of the top range being where that supply is. This is also where you have to have later an SOS, because you've now defined where that top is. Sound familiar? Should. Is this the same thing we have like over here coming off of these tops, right? Is the sign of strength. And interestingly, the sign of strength here, I think, is this big push up. I think this is a reaccumulation over the top. This is a little offset, but I think this is all the sign of strength, and then it does a back up, and then it comes up and reaccumulates. And talked about that a little bit in the past, but it's kind of separate from the other. In our case, I think we've got a pretty straightforward top here around 12. We may have something like that where it does some kind of a SOS high and then comes back up again, over this top. I don't know. I don't really think it matters that much, because in the end, you need to just build out supports here anyways, regardless of how high or low. It needs to come above this creek. So this puts you in the right spot. So there's a wave down. There's a build out to try to get to wherever you're going. I'm making an argument that it could be this. You're like, yeah, but there's a lower one too. Yes, there is. There's just lower trends as well. They don't end until February 2026 over here. There's obviously reason to think that could happen, but it would be really low and boring for a long time. If that happens and we don't go up high and we go to like 12 and then we start coming back down, I think we're going to have some kind of a massive 1, 2, and that's like an M with like a massive jump later. I would be much more bullish. But for now, like, this seems pretty straightforward to me. Like, I think it's built out to go this way. The reason that I got things wrong, and I did get things wrong, the main reason I got things wrong is because I assumed that there was going to be a second top. Or I wouldn't say assumed, I just imagined that there would be a second top right here that would go up to like 860s and then come back down. And that we would do this instead. And instead, there was no second top. We stayed low, and as a result, we didn't dump low. We did a 50-50, but we ended up like kind of holding really low here. So we barely cross down. We don't come very low, and then we do a dump later. It could be over. This is the argument that I was saying, like, yeah, I mean, you could make an argument that this is technically done based on what you said earlier, Booksy. And that would be like this guy here, right? This is why there's some folks out there right now who are like hyper bullish. I'm not in any way against them. I hope you guys understand that. What I am saying is that I don't know for sure because this technically stayed inside the range, which bugs me, and this did not. So I don't know for sure that this is actually over based on a fractal analysis. I think that's a bit iffy because in reality, we didn't actually break down through the range here. Not really. And if we did, we came all the way back up into it, you know? I don't think we did. So I think there's a problem of continuity in that, yeah, like there's some things that match, but then this doesn't really match. It kind of makes me think we'd go back up, test the bottom of the range, and then drop like we did here when we tested the bottom of that kind of middle range, so to speak, and then drop. But whatever. I mean, there's differences. So what? That again, the reason why I think this is so critical is because of that. Partially because of that. So look, I'm sorry I blew up at you, but there's nothing magical about it. Like, I don't see it as that. I see it as like, all right, if you reject here, you're probably going to come back down low. You're at least going to come to the gap. I think that's a given. That has to be in view here. And it makes sense for the 50-50 up, then back down. And then possibly 226, which has just been there forever. I mean, we've had this low since we first came down and made a reaction up and started looking at stuff like last summer. It's exactly what it looks like. And I think talking about coming down has always been difficult because there's a sense that this is really strong. It doesn't feel like you would come down. But they used what they used for a reason. I mean, we walked down to this particular level at 5 very methodically over a really long period of time to get it back beneath this original top that was defined here in February of 2024. And I think that's just another part of this, like this kind of mystery of like, what's the operator doing? I mean, we knew something was going on because they kept using this as a leverage point to kind of knock the stock down. And you can see the walk down through it and then the up thrust here. So, you know, like there's all kinds of little things like that we could sit here and like guess about. We really don't have the answer. I wish I had the answer, but I don't. I'd have to just kind of guess, like, why did the operator do that? I don't know. This is where they chose to make that floor. Arguably, I'd say it was slightly below. We talked about 485 a lot. But I think it was just this little zone right here. This is where the consolidation happens, so on and so forth. I might even argue, yeah, I think the 485 mark was the one I picked out. I still think that's like probably the best. I don't know. There's where those gaps were, the short position reveals, all that stuff. So, anyways, I digress. There's a lot of possibility here in terms of trajectories to the upside. I've also talked about a lot of those. And it's bothersome. I mean, some of the earlier ones we have would seem to be done. Like, we should have already hit them, right? Like, this one really wigged me out. This one, when you use it correctly, and I'm not drawing it perfectly. This one actually goes right into this point if you do it right. And it really bugged me because I was like, why even mark it off? You know, because I can't possibly be like the only one doing this, but I also think like it's not really that common for someone to use that as a target. It really doesn't make a lot of sense. So it's strange to me that ended up being that pinch point, and I don't know what to make of it. You know, there's some kind of if you're going to say something's magical, that would probably be where I would say it's magical. It's like there's some kind of a continuity with the way that these generate on these fib resistances, essentially these fan resistances coming down. I don't know what it's doing, but for some reason that mathematically those targets end up being like these pivot points down here. I'm attributing it to wave theory, but I haven't really been able to define it. I tried to do it once. I don't know if you guys remember that, but it's kind of like a crapshoot. It didn't really work. It didn't work how I thought it should work. I guess I'll put it that way, you know. And I'm like, at the end of the day, I was like, yeah, I don't know. This doesn't really look right, so I didn't use it. Actually, that's pretty good. Let's use this one. Kind of curious if this was like the cat ear here was one that mattered. It does look correct. On rhyme? Yeah, man. So did you get a good run out of it? I'm not being rude. I'm the one that's just rambling. He's a rambling man. Rambling around and a rambling man. I'm still sitting here on Apple waiting if I'm going to get screwed over or not. So I could totally understand. I said I was going to talk about Apple. I don't really want to talk about it. But I could totally understand why you want to shift gears. It's late in the day. Oh, Doge, what are you doing? Woof. Woof, woof. Woof. Man, NU just kind of moving, man. Up at 12. Congrats if you held through on NU. Our targets were great. I just had a horrible contract. Like, it just did not mature well. So I got out as soon as I could with some profit. But congratulations if you held on to that, rode through this. You probably did fine if you got in around 11. Got a dollar move. It's pretty decent, even for just shares only. I think, yeah, you'd be up like 10%. That's a good trade. Really good trade. For about a week. It's not bad. I'm trying to remember where I did the chart on Rhyme. I want to say it's this one or the one way over here. Oh. Oh, that was weird. I like hummed. You know what? I actually think I undid it this morning. What I did is I had 3 charts over here, and I said to myself, why do I have 3 charts over here? It doesn't make any sense. I've been watching Knox. If this breaks out, I think it's going to fly, but it's in a bad spot. It's like a good and a bad spot. NNOX is one that I'm invested in. It's got a diamond for sure. For sure. It's like a diamond something. It's either diamond continuation or a diamond bottom. If it's diamond bottom, it should be pumping up towards... I mean, it really will. It probably is going to go all the way up to like here, which is kind of crazy. So NNOX is one to watch for sure. I just can't quite put my finger on it yet because it's moved methodically out of it, but it just doesn't look right on like the daily. So this has a potential massive move, NNOX, up to like near the top very, very soon. I think this is the one that Rhyme was on. And it looks kind of out there, like too far, but when you look backwards, you're like, no, it makes sense. So there would be a measurement here that you could take from the top to bottom or whatever. And then what you would do is apply that to the breakout here. So actually it looks like even higher. So this has a potential target of near like 34, which is crazy high. You guys are like, well, I want that trade. Yeah, I know. Me too. But because I'm like, man, that's a really, really big trade. That's like 340%. But the problem with this is that it has this bizarre, like distributive looking RSI on the daily, and it doesn't look too bad on the weekly. Like it looks like a consolidation. It looks more like a rising diamond. Like you can see that massive difference in direction. I mean, this looks like one heck of a bullish divergence on the weekly. Like, and this has been going on since 2021. So you talk about a long-term potential like build out here. This is long-term. This is 1,000 days of build out. The problem that I have with it, and I really dislike this, is that you guys are like, what is it? The problem that I have is that it's got a, if it drops back through, and it hasn't done this yet, and I know that it hasn't done it yet, so I'm like, there's not really any reason to like fret about it. But the issue is if it drops back through, this is like spookily accurate for a retracement back down the channel here. And it freaks me out because it's like perfect. And I'm like, I don't know why it's so perfect, but I don't like that. It really bugs me. It's like right there. So I don't know. It's like something about the daily is really throwing me off on this. I know. We'll look at Rhyme, but I just remembered Knox, and I was trying to like look at this trade yesterday. Like, this looks so good, but it looks so good, but I can't, I don't know. I can't quite put my finger on, maybe it's just because of that RSI on that daily. It's just really bugging me. It looks too good to be true. Yeah, I mean, it's like perfect. That's like a huge move, guys. You talk about a squeeze, you want to see a squeeze, like this would be like 360% potentially if this works out. But I'm like, how in the world could it go that far? Like, it just doesn't make sense. The only other thing I can think is to use that hook technique that I did here and derive like a different formula and use this instead, but this is like pretty conservative, so this would be like, oh, it's only going to come up to the top. This also works really well, as I think it is doing a good job of defining potentially where that top is. But this is one of those trades that's getting under my skin lately. I've got share position only on it right now, but I'm like seriously considering, I don't know what I would do, but I'm like seriously considering getting in some kind of a call position because I think it's there. It's just got to go, you know? It's like right there. I'm just nervous because I know like if it's a cat ear, this will push up and it will like fail and maybe like 15 or something, and then it'll come right back down. It'd be like a head fake. I'm really concerned that it does that. I guess even still, if it head fakes, it's probably got to come up to like 12. I don't know, maybe. So I'm like nervous that this does like a fake out and then drops back through and goes all the way back down to like $1. I didn't delete it. I think it's on here, but this makes me really nervous. Apple did something like this the other day. When it went over its creek, it like pushed out like it was going to go, and then it just forms like a forever little distribution here, and it did a little pump at the end, and then it just dumped. So it's just a dangerous play. I totally can see it doing that. Like, If it just kind of chops. So it's already done 1, 2, 3. I'm worried it's going to do like a fourth and then dump. I don't know. I think what bugs me about this the most is just how perfect both of those targets are. Like, they're both right where they're supposed to be. And that just, I don't know, what bugs the snot out of me. I don't like that. What do you mean you don't like it? It's clean. Well, it means that I have to rely on, not intuition, but I have to rely on like other things. So like, this weekly looks really bullish, but if it's just propping it up, then it still looks like a cat ear. I just don't know why you would create this massive divergence and not use it. And the same goes for the MACD. It's like ever since this top, it was coming down, and this MACD's been like pushing back out. I mean, this could be one heck of a trade, but it's like too perfect. Yeah, maybe that's all there is to it. And it's like, oh, it's breaking out. It's just going to go. Is that all there is to it? It's like too easy. You're like, why are you complaining? Just enjoy it. I guess what you could do is do like, again, like shares only and just set a stop for down here at like 750 and just leave it at that. It's a very risky trade if you try to trade options because there's just no telling. If it head fakes, it's going to be pretty ugly. It'd probably come right above here and then dump, which it's already done once. So I'm like, I don't know, man. Maybe that's where the stop loss is at 1060. If it gets back above 1060, then you just set a stop and you don't let it go back below it or something. Anyways, I like this chart. This is a potentially huge trade. But for now, I'm kind of like sitting on my hands about it. I might look at investing something. Maybe with minimal investment, you can get a pretty big return and not risk a huge amount of your portfolio. So I'll try to investigate it later. Excuse-moi. Sorry for sniffling in the microphone. That's probably really gross. Usually I try to mute it or turn my head away. Bad habit right there, I guess. All right. Yeah, I mean, it came down to what we saw as a possible bottom, which was low. I don't know. This may have already been like that yesterday, now that I think about it. Yeah, I mean, we started charting this yesterday. It's not like been a long time. It did dip again, so that was expected. I had it going down a little bit lower. It doesn't look like it broke through the, at least not yet. It didn't break down here. Now that up thrust is weird because it kind of works, like I might have to redraw what I just deleted, but it kind of works in an odd fashion. Because I think that came low. This is tricky. It's keeps pushing down. It just hasn't made a higher low yet. This might be it, but it's just ugly. I mean, I don't really like this chart. It's very easily could just kind of go one more time and try to go for it. But, you know, you trade what you want to trade, so I don't know if I like that. My son had like a jingle bell from Christmas he threw out for the cats, and it's going to be really loud. If they go crazy, I'll take it away. Yeah, I still think you're kind of watching here, and then you probably are going to see it race up towards from like 3.5 up to like 4.4. And then it has to break out there in order to continue. That's still the same. I don't know what all this is. This is like backwards stuff. I'm just not quite there yet on this. I don't see why it can't just keep going down, I guess. They've kind of propped it up like on RSI on like shorter time frames, and it's already hit the, yeah, it's already hit those tops and slid down really far. I mean, if you're going to trade it, like I said, maybe here around like 4.5 would be a good exit. I know it's kind of low, but it is what it is. It's still, I mean, if you're just looking for a penny stock swing trade, it's still 30%. Could be a big swing. Assuming that you don't get in too soon, it doesn't keep bleeding down. It jumped its creek. I guess at this point, again, my bigger concern is that it could be setting up to try to come really low. There's just no telling. So until it jumps this guy, it probably is not going to make another advancement. And if it does, it's only going to more than likely advance to here. This is where things get particularly dicey on these kinds of charts. Because if you just look at it as an expanding iteration, technically this could come up and then drop low and then do it again, you know, and then you would have like a bigger move over here. And it's kind of the risk that you play. It's like easy for me to sit here and be like, oh, if it comes above, it goes. The reality is a little more stretched though. Like this may indeed come over here and check this line, but it may not do it till you get a bigger dump, in which case you're kind of out of luck. But you know, that's just the nature of it. It would not surprise me if it came up, hit like 4.5, and then came all the way back down to like sub 2.9 or something, and then it tries again to advance. I think that would make sense to me. And then honestly, after that point, I've got this drawn out really far, but if it did do that, again, there's really no telling. This could easily be like distributive and come really, really, really low. So, I mean, that's definitely a possibility here. And maybe it takes longer. Yeah, I don't know. So the overall target range here is, I think, where we're sitting right now, if it can form a bottom and not have some kind of craziness go on, is really only up to about maybe 70 cents. That's where I would stop it and suggest it doesn't go significantly further right now. I don't think this is very likely what I drew over here. But yeah. Did it again. Hang on. Let me go blow my nose or something. All right, that was better. Much better. I don't know. Let's take a look. Yeah. I mean, there's some effort here to hold, I guess, the line. Oh, man. I think one of my hairs just fell out. And it's like silver, gray. Ha. Sorry, it's completely random. Yeah, so on WTO, I was most nervous. Oh, MPW looking good. Happy to see that holding up there. On a WTO, I was most nervous about this being like a hook because of this marker right here at 31 cent. When it pushed up, dropped back down. When you look at RSI, you can kind of tell, I mean, it's easier to see what I'm trying to get across because it looks like these are distribution tops, potentially. So it's hard to define this better than just to say like, well, to me, it just sort of appears like it's just a wave, right? Wave. So you're trying to like determine if this is going to, as a quote unquote cattier, if this is going to break out and hold. And what we were excited about was that it jumped above, finally, it jumped above this kind of long-term downtrend center. What I'm not excited about is that it drove down beneath it. So when we came down, I was emphasizing 30 cent. What ended up happening is that it then cracks through this ice here and it hooks around it and drops from it. And now it looks like it's trying to once again plunge it back beneath. So it just sort of reads as like a UTAD when it starts doing stuff like that. And I wish that wasn't the case, but it just is. So I hate to say it, but the lower targets at 20 cents are definitely on the table if you lose 27 and 25. I mean, they're both the last kind of supports right here. I don't see how that doesn't make sense. It looks like a huge double flush. It's unfortunate because obviously I don't want it to do that. But long term, maybe that makes sense. It's hard to say. I don't feel like that was generated very strongly here. I mean, maybe you could make an argument that this has always been in kind of production, just looking at this line. I guess it's possible. I see it in this top. I don't really see it here. This is kind of a mess. It's interacting with it. It's just not sensible. So this looks like a big kind of fake out. So is that the bottom? I don't know. WTO is one that, for me, I put some money into it that I was willing to lose, and I'm probably going to lose it, I honestly think if it drops beneath like 27, I'm probably not going to risk it. I'm on the 1 hour right now, and yeah, like I guess historically when it's oversold, it does eventually pop, but that pop is fairly short-lived. So this just looks like a quadruple top. That's what I'm trying to say. It's like 1, 2, and then this is the weirdest one because it looks like it's in the middle. So I'm like, where's 3, 4? And that's what I was saying about the other day is like, I'm not really sure. That could be 3, 4. I'm not really sure. It doesn't really make sense. If it's just a gigantic upthrust, maybe that's because 3 and then 4 is going to be like a hook. So instead of 4 being high above, it's actually going to be below like this. So what I was suggesting is that if that's the case, and 4 is actually just going to be like a downward move below, then you might still get some kind of a turn up here. It might dip and then rip back up to this area, right around 36. But then if it loses 36, I think you're kind of in deep doo-doo. This is just the way that I see it right now. It's a lot like a lot of other things we talk about. It just has to kind of get back above and hold it. And if it doesn't, then yeah, I think it's going to use it as a way of driving the stock price back down. And I don't expect this would last very long if it's distributive, because these have been pretty slow or pretty fast. It would be surprising to see it take forever. More than likely, like the first action from here would be dropping below this middle. And then, I don't know, from that point forward, just see what happens. So I'm not a big fan of it. I think if it comes back up to 36, I'm going to put a stop loss and just be done with it if it drops beneath again. Because I just don't want to trade it anymore. I don't feel confident about this right now as it is. If it went low and then it recovered high, that's a different story. You know, if this were to drop now and then went down to 20 cents, maybe if this recovered high, but you're kind of in the exact same position you were over here. It just keeps rinsing and repeating. The only real like saving grace from all this might be on like a weekly or daily time frame. You know, maybe there's something going on here that's more positive, but honestly, like this looks like garbage on the weekly, but it's just hard to read it. There's like nothing there. It's like flatlined. Let's go to daily. Yeah, I mean, the daily looks kind of junky. Like it just crossed up and then came back down. It looks like a widening to the upside. See how it's widening out and then just crossed below. So my guess is on the daily, it would be the difference between this kind of coming up and then dropping, giving you that 50-50 versus this coming up and like holding above and then getting that rally and finishing like a new wave here versus like a breakdown this way. So if I'm trading WTO, that's probably, I mean, this is the best I can do for it right now. I think you're likely going to get some kind of a retest. Maybe it's not this high. I don't know. It doesn't have to be very high. Because it could technically like piddle out here under 30.43. But I think you'd probably see some reaction. And yeah, I think if it rejects advancement, we just keep it simpler. I could make it simpler. Maybe easier to read it. So if this kind of rejects here at the top, maybe it goes through it. It's probably going to come back down versus, you know, advancing and then holding and then breaking. That's why I put the confirmation way over here. For somebody that's not in this trade, I don't really think this is a great trade until you get above like 40 cents. Even though, yeah, you could be buying in low here or averaging in if you want, it's not going to make a big move until there. And then, yeah, we might see it make a pretty decent stretch. I don't think there's a particular like place that I would look for in terms of like a high, except for maybe up there where I already put my exits. But like that looks about right to me. Just looking at like the underlying trajectory here, ignoring like the upthrust, it seems like this is where bulls were trying to go. So maybe again, like exit A. It's not the greatest trade in the world, but it's there. It's a possible trade. So, all right, I'm going to talk about Apple a little bit. I know that a lot of y'all probably don't care about this. You didn't enter a trade like I did. But yesterday, after the stream, it was around here. It actually pushed up to like 220, 120. So I got in maybe a little too early because what I did is I got in on this creek jump here. So what I saw was a creek jump and a retest. So I was like, oh, I like that. So I went ahead and entered this trade at that time. And when I did that, I was thinking to myself, well, it could come back down maybe tomorrow because I don't know if you guys recall, but for Apple, I thought this looked like a really nice setup. And what I said yesterday, before all this stuff happened, was I had something along these lines here. That this could come up and then, you know, basically form out like a normal Wyckoff type of range and then break out later. And on the big picture, you'd probably see this as like a big M, you know, something like that. Okay, so I had it coming up and over, and it basically just like a really simple, like this just jumps a creek and then goes up, right? And that's kind of what happened, but it didn't happen the way I thought it was going to happen. So I entered it, and this is a good lesson for you, I suppose. I went and looked at the news about Apple, and I found the reason for that big drop was because they were downgraded by like two different firms. But the key there was that those two firms were already bearish. So like what they were is they were already bearish on it. They thought it was going to come down low to like 200 or something like that, or like 220, 215, you name it. And then they downgraded it to like 200. So they were bearish, and then they became more bearish. And what they cited was that Apple is struggling in China. That was one of the big points, and that they ultimately didn't have a very good margin for increasing profits because their share buybacks, we're talking about a healthy company here, their share buybacks were having diminishing returns. Like they weren't doing as well as they used to. Like they don't make them as much money, and they're too costly because this is overvalued. So the argument was that Apple's overvalued, right? It doesn't really make very good money doing share buybacks at this point as a result. It's like diminishing returns, kind of plateauing. It doesn't have as much growth potential as it used to. They're just not seeing it. And then apparently they have like a problem selling in China, which is where their manufacturing is, I guess. And all of that to conclude, they then said that there was not a lot of user interest in their AI, and that they've had some of the worst AI reception. And then to make matters worse, Nancy Pelosi posts that she's buying all this stuff, and apparently she also exited her Apple trade. So the whole thing just kind of screams of like fear and doubt, right? Like there's a whole lot of fear and there's a lot of worry that this is going to go down. And I'm thinking to myself, well, that explains a lot as to why this had this like massive drop here. Even if, yeah, part of me thinks this already looks like it was sort of at play. This is like an LSPY. It still was presented in a very negative light here, right? This is a huge sell-off, a lot of volume. And then I'm thinking to myself, well, that makes a lot of sense of this downside, but does it affect my trade? Well, no, because from a technical standpoint, I still think the trade is there. Like I still think the trade is up to 229. I made a really long argument about it yesterday. We looked at the technicals. There's just a lot of reason to expect that this might pop to 229 and fill this bigger gap right here before, if it does continue down, before continuing down. We noticed that there was a lot of strikes up here around the 240s. Like those were where the bullish strikes were. And it's because there's another gap up here at like 241. And I think that's a big part of it. There's some triangulation to it, but not that much. Otherwise, on the big picture, Apple looks like it's resting on a major creek, and it's an intersection of like two major pathways. One is the very obvious, it's anchored here, very obvious downtrend. So this would be like the third hit on that downtrend. The other would be this creek again from the past, and it hits and intercepts right on the dot. And then the final kind of interception here of what's being crossed over is this kind of blocked zone, which is the bottom. As it did hit this low. So there's just a lot going on right now, right? So it clearly lost support. No one would argue that. It also lost this uptrend, but it hasn't yet tested this uptrend. So again, this leads more probability that this is going to come back up at the very least to test this trend that it left at 229 because of that fear-based sell-off. There's just very little reason why I would expect this to continue dropping here. And if nothing else, even if it did drop, I would still expect it to come back up. And check this. This is not like a penny stock. This isn't like a small cap that does random stuff. This is a big deal. This is one of the big ones, right? And it's usually fairly logical. You get a big gap down, you're going to come back up and fill it at some point, especially if it has a high volume bottom. Now the bottom here is a bit concerning because even though there's a high volume sell-off, as of right now, it hasn't yet gotten that pick back up. There's like a small kind of a ramp of volume that happened here yesterday into the close, which I don't like. And I said on the, I was like it was so prophetic It makes me mad. As I said in the Discord, I was like, oh, well, I don't really like that kind of end of the day, so I'm hoping it's not going to just dump because it looked like it pumped up at the close. And it did. My contracts went up to like 20% or something. I was like, wow, I'm going to make money. And then the first thing that happens when it closes is it starts bleeding back down. Within, an hour, it had dropped like 60 cents or something to a place of like almost $1. And I'm like, good night, right? And you can see that it opened really, really low this morning. And then there's this big buy candle that just buys up through all the rest of this again. And I'm like, this is confusing, right? This is a really confusing trade because some indication here, like I remember we went through this and I looked at the hourly and I'm like, that hourly looks so bullish. Look at the triple bottom here that's slightly rising. That's a bullish divergence on RSI. That's a massive bullish divergence. I marked it off with these little green guys on the chart. That's the same with the MFI. But could it be erased? The answer is, yeah, it could. If it dumped right now to a low and this happened to come down, technically it could be erased. But on the hourly, like that just looks really bullish back up to 242. And that's, again, maybe that's a big part of the reason why a lot of these option contracts came in for 240. There was a huge amount of open interest for 240. It's like, I think that's what they're reading is this giant divergence, this huge double bottom on MACD, this divergence on, and even in the end, if you look at this last little bit here, though there is not a divergence on RSI, and there isn't, RSI plunged to oversold territory on the hourly. If you look at the MACD and you look at the MFI, which is a volume-weighted RSI, there is a divergence. It does actually build back out. So this looks really, really bullish for a good trade, potentially to the upside. But this crazy nonsense in after hours has to be addressed. And so I'm like watching it yesterday, thinking to myself, well, it could hold this, it could hold that. And it's funny because like, to me anyways, like I can't interact with the after hours price action. So when I posted it, I think it was like here, it was doing something like this. And I was like, well, it may still hold this like outer trend is what I said. It may still hold the lower trend. And it did. It held the lower trend all the way until pre-market. And then I get on this morning and I'm like, what's going on? Right here, I'm like, it just dropped that. I was like, you better not. And then it does. It dumps all the way back down. And I'm like, goodness gracious. So I decided to not exit. I was like, you know what? I don't know what to make of what's going on here, but it's kind of like what I expected with an auto reaction and a phase B top. Potentially this could just be a spring. I was like, but it's ugly as all get out. And even in that pre-market action, it actually went below the floor. So it went all the way down below the floor. So I'm like, this is dumb. So regular trading hours, when it opened, it did not open below the floor. It actually came up and opened higher at 219. Now you see the issue here is that all of that stuff that happened in extended hours, I'm just sitting there on my hands like thinking, there's nothing I can do, and I'm just going to wait until the open and see what happens. Rips up at open, comes, pushes the resistance. Yay, maybe it's going to try to go over 223. That was the resistance in extended hours. Does it do it? No. Bleeds all the way back down. And then it's just been steadily forming what looks to be a kind of a flagging action right now. I got to be honest, it's not my favorite because the way that things move is important. And even though extended hours is absolutely not the end-all be-all, the fact that it made a lower low in extended hours really bugs me. It could just be a sign of, again, maybe a sign of things to come later on. Maybe there's a desire from somebody to get out of a position or get into a position. I don't know. But it opened beneath the trend, which is bizarre. It just opened at a higher low, which is not bizarre, which is kind of good. I'm like, okay, well, that's good, right? Yeah. I mean, technically, yeah. If it's above the previous bottom, then you could interpret this however you want. It's just a rise with a backup, and now it's trying to advance around that top again, which is anchored around 222.45. but it certainly doesn't like build up a lot of confidence, right? It would have been nice to have this all happen in regular trading hours. And looking back on it, I'm like, I still don't really know how I would necessarily interpret this. But I think what I would do is I would say that what happened legitimately, if you look at not using like extended hours junk, which you could use, but I think what I would do is say, yeah, I think legitimately what happened is this came down, it made a low, and then it pushed up and it pushed resistance, which is what you want. And when it came back down, even though it went below this low, it technically made a higher low. So the more bothersome thing is that it didn't hold. And this is, I guess, where I was left kind of like scratching my head, is it didn't hold this, which really bugged me, which would have been a very clean exit. It's what you want to see more often than not. So the biggest problem right now I have with it is I'm worried that this is a sign of weakness. I don't know what to make of it, right? It could be. If it's a sign of weakness and this is an ascending channel, right? And you had multiple hits on it, and there were, we could say like there was at least 2. And that's what this is, right? That's basically what we're experiencing here. The creek jump happened and then it come back down and it checked that creek. That didn't get me squeamish at all. I was already in the trade. It dropped like 5 or 10%. I'm like, I don't care. I don't think it's bad. But then what bothers me is that when it finally took off, that somehow it has this push and then immediately kind of comes back through that level. So it's a bit of a mixed bag for me right now is what I'm trying to say. Like technically, yeah, in regular trading hours, what you would see is that this actually came up higher. This is this candle right here, and then it came back down. It looks like it held, and now it's doing this like weird little sideways action kind of bit, right? You're just drawing out the same chart, Booksy. Why are you doing that? Well, this is my my problem, right? Is like when you're doing like a stock analysis, you try to use as consistently as you can the terms that make the most sense to you. Most of the time, if I were looking at this and I was doing like a textbook why coffee and whatever, I probably wouldn't think much about this. I'd think it pushed resistance, made a higher low, pushed resistance, period. That's it. Like there's nothing else to it. There's no mystery to it. It pushed resistance, made a higher low, pushed resistance, made a higher low. Who cares? Well, nobody, right? It's fine. It could still advance from here. It's in a position where on most time frames it's got plenty of upside. Lower time frames it has some chop. However, I've seen it a lot on AMC, and I know this is not AMC, but I've seen it a lot on AMC where the initial push is then met by a new distributive action. So one of the things that bugs me, and again, I'm trying to use this as like an object lesson, is that if you were to expand this outward and use the extended hours, you would find that this top is quite elaborate, right, before that drop. That it is like a distributive style action. So using extended hours here sort of changes it a bit. It doesn't turn it on its head completely, but it does change it a little bit, If you use the extended hours, what it looks like is that this plunge beneath and then it's going back up and it pushes higher, which is fine, right? But it's essentially kind of like doing the same thing again. And I've got this sort of off to the side in a weird way, right? Like this. So I think what bugs me is that a lot of times what we've seen on something like AMC is that becomes a little bit of a weakness point, indicating that you might be doing like a UTAD type cat ear. Now, would that be the end of the world? No, because in the bigger scheme of things, it doesn't necessarily mean it's going to dump to new lows. It could just be that this is going to take a breather and come back down and try to build out a more proper, this is like a 1-2, 1-2. It's going to build a more proper 3-4 after doing kind of a barrel bottom, right? And then it builds out a 3-4 here. and then you get like a longer term breakout. So it's not like, oh, it's the end of the world. Again, here's the clincher, I suppose, is that in extended hours, it did come lower. So the issue that I'm having right now is like, if you choose to use extended hours, it kind of like softens the blow of what this could be. You know, if you think it's going to form out a bigger wave, this could be a wave down. But it also adds to the blow by suggesting that, well, technically it came lower. And that would suggest a lot of things to me, you know, long term. So what's the point of all this? Is this a good trade or not a good trade? I think what this is telling me as a trader, and what I understand when I see stuff like this, is that I need to just kind of stick to what I know as the most basic understanding, because at the end of the day, if it expands out, it might end up hitting another low. And that's going to be a real reality here. They're like, hey man, if I got in too early, I got in too early. That's all there is to it. The 4 hour looks really nice. It's an engulfing candle here. It needs to finish higher, but it might be a really strong engulfing candle, you know, and it could potentially play very well for a reversal. Even if the volume is kind of low to start, it's just a beginning. The next candle would be bigger, and then it would break out above 225, and that's where you'd see potentially some serious momentum build, you know, in going back to the upside. So I'm not really worried about this trade, but I do need to keep in mind that, like, yeah, because of what happened in extended hours, regardless of how I want this to go, which this would be very nice, right? I would prefer it just go right up, right? And be a flag and just go. And I like the candle here right now. It is a hammer, at least on the 2 hour. So again, that could be done in like 10 minutes, be a nice hammer candle. I need to also recognize that it's possible that this comes back down. So if you're somebody that was like even remotely interested in this trade, I think it's a really strong trade. I do. From like 224 up to 229. I think getting in right now would be getting in with a little bit of risk, as it hasn't yet confirmed a breakout. But I also think that if you don't get in right now, what you'd want to watch for is you'd want to watch and see what happens here, right along 221.90. I think if you lose this 221.90 area, I'm almost positive it's going to come back and try to get a new low. Again, because of the nature of what happened, it doesn't necessarily look like, it doesn't look like it hit a new low, Booksy. But I think it will. I think it is that after hours price action is probably just an institutional marker. So if this breaks down, it's going to look like a cattier breakdown. It would come this way, and then probably it stops short of a full breakdown. You know, it's probably not going to be like straight down, but you'd have like chop. And then you'd end up like with this kind of secondary move like later. And it, again, could be fine. This could be a defining M, which I don't want to over stress the downside. It's just that if that happens, I would be anticipating that this is going to build out and then jump the creek after dipping low, like potentially for a spring. I think it'll go to like 219, and then it might rip, as opposed to what I'm saying right now, which is a flag and run. So if you're not in it, the entry isn't really right now, in my opinion. I think it would have been fine yesterday. You'd be up a little bit. But I think right now you really want to look at, 223.50 is a good one. But I would be looking at right on this top area. And if it doesn't make that move, I don't think it's a great entry right this second. So I'm redefining it because I think it's at this point where I could definitely understand what happened in after hours in light of this future. Less so with this one, unless it was just like, again, a liquidity dip and just going to immediately like eat it back up. Historically, Apple takes between 2 to 3 days to really make a bottom, even if there's a big gap down. So I went back and looked at a lot of those gap down bottoms that we've had on Apple. And I don't know this stock as well as I know other stocks. Let's go to the daily. It's easier to count the days. But I do know that patterns tend to repeat themselves, and if there's a behavior pattern for a particular stock, it's good to pay attention to it. This was 2 days, and then the third day, it rose again. All right, Apple's not Jesus, but you get what I'm saying. And this is 1, 2 days, 1, 2, 3 days, and on the fourth day, it found support and then broke out. And it really took 5, 6, 7 days before it finally found a bottom again. This gap down is probably the most comparable. It's the most similar. This took 1, 2, 3 days. You can see to get back above that mark. On the fourth day, it actually broke up here and held, and then the fifth day started running. So there's not really a lot of examples where this happens in less than 3. So it would be unusual if this didn't take another day or so to really break out. It would be just something unique. It's not like it couldn't. Obviously, this happened in 3 exactly, but by the third day, it was up and over. But that's about as fast as you might expect it. So, yeah, at this point, oh, what happened there? Uh-oh. Why are you saying uh-oh, Booksy? This might have changed. No, it closed oversold, but I thought it was lower. So the close yesterday, oh, I get it. So the close yesterday brought it back up because they pumped it up at the end of the day, like really far. It actually looks almost like a hammer candle, a red one, but it almost looks like a hammer candle. There's a huge wick on it and the high body. It's really bizarre. And so this is trading like the lower part of that wick right now. It's almost inverted. It's strange. And then the wick is like right there. It's very strange. Daily. So I don't love the volume right now, again, on the pickup, but we'll see. So I'd rather have a nice heavy green candle to start. We're not getting that today. Who knows? Day's half over. Maybe it'll change. We'll get something big here volume-wise. But as a result, this was way lower yesterday. This was like down here to like 28 or something. It's at least a point or two higher than it was midday yesterday because it was significantly lower. So this kind of makes me a little worried, again, that it may need to come down again. Whatever. I still think it's a good trade. I have an option contract, and that's the daily. So again, that's another reason. There's the daily 180. There's another reason why you might have some serious resistance there at 223.5 is that daily 180 breaking above that would be strong confirmation, I think, of probable continuation back to 230. These are hefty contracts. They're kind of expensive. I think the ones I bought, I got February 21st. We went through it all yesterday. I told you guys what I had, what I was looking at. I got February 21st, $230 calls. These, when I bought them, were about $3.85. They're up to $4.45. So they've become almost, not $1, but like 70 cents or something more expensive since then. They dipped really low this morning to $3.30 on the open. When you look at the chart, which I can't show you right this second on the screen for like privacy reasons, I got too much information over here, I guess. When you look at the chart for that options contract, the gap down was actually $7.41 here and dropped all the way down to a low of $3.50. So they lost like 50% value, more than 50% value. And that's what made me attracted to them because they were really low. Like that's a significant drop in price. Based on the overall trends, though, I would suggest that even if this comes up and hits that top at 230, it's unlikely this ever gets back to 730. As you guys know, theta eats up a contract. What does seem possible to me is maybe 650. So if it holds here and these are around $4, $4.40. I think you could see a $2 increase in those potentially just from here to here, which is a big move. Okay. And I think we did the math behind it yesterday, and I put that on the screen. It depends a lot on IV change, right? So is the IV higher now or lower? I mean, it's probably higher. I can research it really quick and just check. Open interest on them is at 17,000, volumes at 4,000. Last ask was 450. Last bid was 440. Change today is they're up 5%. Excuse me. Where is the implied volatility though? IV index. Actually, I'll just go back to the options chain since the implied volatility is on here. So just a moment. I'm going to load it up and I'll let you guys know what's the change. Right, so the 230s, again, they're around 445 to 450 right now. The IV is at 28.12%. So when I bought them, they were at 27.64. Now they're, on the second day, they're at 28.12. So there's been a very, very small change. I'll do day 2. Just where I'm checking is like middle of the day. It may change. Okay. So this is an interesting way to kind of do it. What I'm doing is like when we do trades, a lot of times I'll try to post the results. But what I'm not doing is I'm not really tracking it with you. So I wanted to track this with you since it's one that I'm taking quote unquote live. That way you can track it with me and see what's going on. If you're not doing options, it may not interest you, but it's I think it's interesting. So I'm going to try watch and see what happens as these mature and see what changes. So that's not a huge percentage change. That's a pretty small percentage change. I wouldn't expect it to move very much until like a bigger move up. Nearly 100%. No, that's not 100%. That's a very small change in IV. Are you talking about the contracts? They went 380 to 450. That's not huge. That's not tiny, but they are chopping really a lot. So I think the volatility was higher first thing this morning than it is now. They're finally starting to take off. They're sitting at like 4.5. Oddly, I like this because, I mean, unusual in some ways, but the actual price action looks really similar to these contracts. But yeah, if it goes up to 650, sure, that's a big trade, right? And there should be an IV hike. What I like about right now, what I'm enjoying anyways about these is that it looks a lot like, which isn't the case with, I mean, I hate to say it, but anytime I've traded AMC, the options do not look anywhere close to the price action usually because the theta is like ripping it apart. But this bottom actually looks quite a bit like what we see in the actual chart. So I'll show you with a screenshot. I can do that. I'll show you what I mean. So if you never charted a options contract, I mean, you can do it. I would not suggest that it's a bad idea. I think it's a decent idea. I think you got to be careful because there's some things that just don't work with an options contract that might work with price action, because the options are obviously at the whims of all the Greeks, and there's a lot going on there that changes the quote unquote price of the contract, right? In terms of like what you're paying for that option to buy or sell something. And so you have to keep in mind that like the normal traditional charting techniques may not be that applicable. So like here it is. So does that look pretty similar to the bottom we have? Yes. Does it look pretty similar to the price action? Yeah. And that's what I'm saying. Like one thing I really like about this right now, and this is widening, by the way. I don't have the bottom in there, but it is a little bit of a widening spread. One thing I like about it right now is it is fairly 1-to-1. Then again, this did come below the floor, whereas it opened technically, right, above the floor. So there's like minor differences there, you know. I would suggest that this little area right here is kind of maybe the defining range, right? And if I were going to doodle on here, I might put like a middle here and suggest to you that, you know, maybe it gets up at least to that middle on a move. That's a decent price increase because that's going to be around 6. And then I think this particular area right here is actually a long-term trend that doesn't seem to really exist on the price action, but it does exist on. So I'm thinking that it might be more of like a downward tilt. And if this happens to break up, that it's going to be pretty much right here in this pocket right here. Even if this comes all the way up to 229, I believe that's more likely what's going to happen. So, yeah. Another part of this is because when you look at the price action, you can see there's like a slight slump. It's not significant, but there's like a slight slump in the difference between the contract, which is, rushing towards expiry, right? And then what's going on with the price action. So like looking at this, where did it go? Looking at the difference, you can see that like, whereas this is chopping right along it on that bottom, this is actually kind of struggling to get back above. It's like below. So it would lead me to believe that that's probable. You're going to see that similar kind of decay, right? So this is actually where it is as opposed to up here, there. You can see the difference. So it makes me think like, all right, if it does, it's probably going to be here again, not like it'll be lower, like right around there, as opposed to coming right up to where this gap is here. I don't think that's likely going to happen. So I'm not trading it to get to 750 or something or whatever. Now you might say, well, why don't you just wait? Because it might go up after like a pullback, could go up to here, break out. But again, that's not really typically what we see with the options. It just depends. If this raced really hard to like 240, all of a sudden, do I think that would happen? Probably. Probably. It probably would. But do I think that it's likely going to be, in line with the price and the way the price is moving right here? No. So again, it would be like if the price did manage to come and break over like 234 and then tried to advance to 240, I don't know for sure, but I would be willing to suggest that this actually chills out below as this is above. And again, I don't think it's likely going to come much higher than there, which is like the last liquid center, which still could be like $11, assuming that it makes that move. And this is actually a bottom and so on and so forth. This is a weird way to estimate it, I know, but in the grand scheme of things, it's good to have like some idea of like realistic expectations. Like this is clearly some kind of a wall right here at like just under 10. And having that in your mind would probably be helpful so that when it comes time, if it hits the price target, but it hasn't quite gotten there on the contract, knowing that it's not likely going to be 1-to-1 is beneficial. And I think it's important to remember that they're not likely going to be 1-to-1. So I would not suggest, treating options as 1-to-1. They're not 1-to-1, but you can chart them. And I've found that that has helped me quite a bit in the past to just like know where I'm at and know like, oh, is this contract still like earning something or is it just struggling? When I was doing NU, yeah, it's trying to keep that bottom on WTO. When I was doing NU and watching those contracts, would I have made money if I just held on to it? Probably. But one thing that bugged me is that this area right here, all the way from January 8th to the 21st, I mean, it was a long time. The contracts were basically like zeroed. Like if you looked at the contracts here, they were bad. They had essentially like flattened out in this price action down low, and then they were just chopping really low, and they barely popped up. So this looked nothing like at all. I mean, it looked nothing like what you saw in the options that I bought. Well, then, isn't that your problem, Booksy? Well, yeah. I mean, it is my problem, right? But these basically just kind of flattened out, and then were occasionally like blipping. You know, this is what it looked like. It was like nothing, right? And I finally got out, and I was like, I'm done. You know, I got my couple pennies. But that's what happens, right? Because of decay. So Apple might want 215 before 230. Yeah. I mean, that's what we were talking about here. It may need to come down lower and drop low. 215, it's possible. I think it's going to, if it does that, it's because it's testing this mark here. I'm not sure if it gets there. But yeah, it's possible. Either way, I think that the bigger picture to me still looks pretty good. Right now on the hourly, I was waiting for a breakout, and I think it got it. But it's kind of weak. It's like barely out on the RSI. I don't know. MACD's going too crazy. Price action isn't following through. MFI on the daily looks kind of meh. It doesn't really have any surety to it. There's no bounce just yet. You could easily look at this and think, oh, it's hitting the bottom. Or you could kind of fudge the line a little higher and be like, no, it's hooking. You know, I don't know. It's still divergent technically because this is a massive bottom. This is still way high compared to where it could be. But it definitely makes you think, sure, it could come down again. RSI, same deal. I mean, it's like I don't need to have a perfect understanding of this to understand like this is possible breakout, but it's also possible that this doesn't hold and kind of comes back down and slumps low. It could hold on the outside here pretty easily and come back down. Wouldn't hurt it. I'm not sure I'm enjoying RSI as much on Apple as I do on some others, but it's been decently helpful. To me, this still looks like distribution at the top, possible middle here for a slump, but I don't think this is going to likely stay this low this long. I just can't find any real examples where that's happened. Like this again, I think this is one of the better examples of a similar setup because this pushed high before it dropped low, and it did the same thing here, and it was on this hook right before big gap down, and then it chops quite a bit before breaking out several days. And this is similar, like it pumped up here and then dropped back low. So again, similar in terms of the setup, and there's a possibility it works out in a very similar way as a result. I'm not sure about like parallel or anything like that. Maybe there's parallels there. I'm not sure. Gap-wise, it's similar as well. I mean, there was a gap here at the top. This would eventually come back to fill, you know, in that reaction. You would say that if you were talking about a similarity, you'd probably be looking at least, again, that 240 area would be similar to what happened here. But there's a key difference, and you can see it right now on the hourly. Like, the key difference is kind of like what happened in this area with this reaction was definitely dependent on coming back above some of these moving averages on the bigger picture. Another key difference is I think on the 4 hour or the daily, this is significantly below, at this point, it's below that 4 hour moving average. It was not here. It dipped beneath it and then rebounded quick. So there are some significant weaknesses here that need to be addressed. And yeah, beyond that, I'm not sure that the comparison would be bad. I think it's a good comparison, but the weaknesses themselves are kind of obvious. So I think if it goes up, it's likely it could come back and hit maybe even that 240 at some point, but it would be I mean, it's a big move. It's a big what if. It has to come back above here. I'm more inclined if it gets there, it kind of like barely gets there and then sort of shelves right here. Because this is historically like a big resistance, and it already dumped it. So, yeah. So I don't think it's a bad trade up to like 237. Beyond that, I'm like, meh. For all we know, there could be like a distributive action here, you know, that just drops it and then it continues way, way, way low. You can't judge it very well because that's just a ceiling. So I would be inclined to think it will happen, but anyways. So we'll keep an eye on it as we go along. You know, I might be in a position where I'm losing money in the next couple days if it does dip again, but I'll keep an eye on it, and I'll let you know if I change my position at all. Right now I've got profit, but I don't have a lot of contracts. So, I mean, I could get out of some of them, but it's like, well, then I'm losing exposure, quite a bit of exposure. So they were kind of expensive. So, I mean, like, right now I'm like, you know, maybe I'd exit 1 or 2 if it got bad, but it split my position in half or whatever. One contract costs you like a few $100 here. If you had 10 grand to throw at it, I'd be happy with what I've already made, but I don't. So there's that. That's why, you know, people talk about how like it's hard to make your first 100,000 or whatever. This is kind of why. Like in terms of earning it, it's hard to make the first 100,000. It's easy to make the million. I've heard that a lot. From a mathematical standpoint, I don't even really care what the people actually say about it. From a mathematical standpoint, it totally makes sense to me. I'm like, yeah, but that's just math. You make 10% on like $100 is a big difference than 10% on $1,000, you know? Like the numbers are proportional, but it still like adds up significantly faster at some point. Plus you're refining whatever technique. So yeah. So I'm like, I get it. I totally get it. If I had spent 10 grand on this and I'm up 10%, well, you know the math. Then you just made like $1,000, you know, basically doing nothing, but just holding it for a few hours overnight. That's a lot. I mean, you could be like done. You make $1,000 a week, you make 50 grand a year. It's going to get taxed, but you know what I mean. That's still a working, livable wage. But if you can only put in like 1,000, then you're only going to be up, what, like 100, right? So that means you have to trade a lot more to hit the same kind of goals. So if you imagine like I had to trade 10x, I have to do 10 trades at 10%. With a low value account, if I do the same 10 trades, 10% with a high value account, I'm making 10 grand a week or whatever instead of 1,000 a week. I mean, it's kind of a crazy number, but that's why people get if they're really good at it and they're consistent with it, and they don't waste time and lose a bunch of money, if they're good at making sure they're stopping it at the right times and so on and so forth, then tend to be in really good shape over time, because you get used to trading higher volume for lesser profit, like just doing more trades. So it's easier then to trade a little bit less for even more profit, which is kind of crazy. It's crazy to think about. You cut your trades in half and still make more if you have 10 grand versus 100. That's just math, right? It's not complicated. So people say that it's really hard. You've heard it probably yourself. They say, oh, it's hard to make your first 100,000, but that's because you're working with like really small amounts, you know. And frankly, at that point, you're having to overtrade. I mean, you kind of have to trade a lot to get what you want. So it's interesting. This is weird. This is the same kind of... I'm noticing now something interesting, I guess. I don't know if I keep using that word, but I'm noticing that these wicks are being... Because we saw that on the... What was it? The daily or the 4 hour? No, it wasn't the 4 hour. It was the daily. Yeah, this looks kind of meh. But we noticed on the... shouldn't it be on like a new one right now? Oh no, I got 8 more minutes. Yeah, it's struggling. Close, man. It's weird. It's weird watching like the candle bodies go down, but they're green. It's super strange. You're like, oh, it happens all the time, Booksy. Does it? I don't think it does. These didn't go down. These did. These 2 candle bodies did. I'm trying to think of what that would mean for... I understand the idea of an inside candle, like consolidation, why people count those. I'm trying to understand why, if you're looking at a candle body, I guess these kind of do list down. But they're also making lower lows. This is the only place I can see that. But this is, again, kind of different. I don't see it anywhere else locally. I'm trying to think of what that means. Because it means that... I mean, it just means your closing value is higher than your opening value. But it's like it's chopping. Almost like in between the... How would you even do that? How is that possible? So the high, let's see here. Why can't I not wrap my brain around this? Because I'm trying to think, like, where would that come from? Because it just comes from the gap, I guess, right? I mean, like, that's the only way this could possibly happen. You can't possibly have, like, 2 candle bodies that are lower, one lower than the next. And in this case, with, like, higher volume. It doesn't make any sense unless there's a gap down. There's no way to do it. Because in order to get there, you'd have to close low on the first candle, not close high. You can't close high and then open low unless there's a gap down. It just doesn't make any sense. So I guess that's the only place that happens. That's super strange to think about. Yeah, I know. Percentages don't matter. But it's more than just percentages. It's habit. Yeah, so it's a habit of what you're habit building when you're doing a small account probably really rapidly builds up very rapidly in a large account. I know what you're saying about percentages. You're right. There's no difference. That's what I was trying to say. Like it doesn't matter, but in terms of like quantity, I don't know. I think it's just about habits that you form probably and like knowing which trades are better and yada yada yada. Not so much just the percentages. Of course, you put yourself in a higher tax bracket. Speaking of taxes, tax season. Put yourself in a higher tax bracket, then you're also going to have to take more out for Uncle Sam. This 4-hour RSI has not yet broken out. And to be honest, it kind of looks more like just for now, it looks more like a distribution of sorts. Again, it crossed down. It's a very strange chart, guys. This is why I was concerned about maybe follow through going low. I don't think 216 or whatever Reese was saying is necessarily wrong, but like it's already at a pretty good spot where it could stop and hold. I'm not sure it'll go beneath 218 to start. There is a gap way down here at like 216. So I suppose that's a possibility. Hits that gap. And at this rate, who knows, man? Could do it in extended hours or... Yeah. I figured it out. I don't know if... I think you're in the past a little bit. That's okay. Now I'm in the future talking about the past. Yeah, so this needs to come above on the 4-hour, I think, and cross up and over here. Otherwise, it's in kind of a bad spot. I don't know. It's just kind of flattening out and just hasn't quite made that move yet. There's nothing else to really say about it. Whatever. The thing about that gap low, though, is that I don't necessarily think it's left unchecked. I just think that we may just leave it for later. Like, if you're going to bring this up and then crash it back down, whether you go to 240 or you go to 231, no matter what happens, if it ends up coming back down, which has sort of been my idea here, then it really wouldn't make any difference for whether you hit this gap now or later. And I don't know, there may be some other stuff down here we could look at, but yeah, I don't think it would make a huge difference. Yeah, I'm most annoyed by this daily. I think that was really what frustrates me here, is that this is over, but I'm like zooming way in to see that it's oversold. And I'm like, no, it was way lower. So whatever was done was done. This looks a lot more like that classic drop with the stiletto, doesn't it? On the daily, here to here. Yeah, that's a good point, Titleist. Yep. My cat wants to go out. Hang on. Come on. Walk away from me. You walked up here. Nice outside. Yep, that's right. So it's hard to... This is a hard one to judge. I don't know. I feel like the candle is just kind of eating up what was yesterday kind of a bullish looking candle. And I'm not sure. Maybe once it's done, we'll get some continuation. This looks meh to me. I just don't feel like good about it anymore. But I'm looking at this drop. I wanted to see what this looks like and where that was. That's right here. So I don't visually, I don't see that very well on the price action. I don't see that drop. So it might be helpful. It looks like it's, you know what? That's not helpful either. Where does it start? Right here. It looks like Friday into Monday. So let's go down to like the 1 hour. It's okay. Friday into Monday. That doesn't look the same at all. Okay. So what are you trying to look at, Booksy? Nothing like particularly new. It's just this is an S curve, right? And so there is a pattern to S curves of drop, consolidate, drop. I think it might be done. Look at where that middle is on that pattern. It's right here. I mean, it works really well as the center mark. What that means is that your auto reaction, in theory, assuming this all works out well, your auto reaction might be from, that's a weird ledge too. There's a gap there too. It's a weird chart. 259, this is just strange to me. So there's the early S curve, and this is the bigger S curve, and then this is the last S curve. You guys are like, what if there's an even bigger one? Well, if there's a bigger one, it's going down far, but I've already kind of talked about that. I think that might be happening here. This could be the first of the second ear. This could be like a whole leg here. Anyways, we're not there yet. These build out on themselves. Pretty easy to identify once you know where to look. So the implication is that this first drop, though not always, is probably an auto reaction drop. Not always perfect. It's usually a decent auto reaction drop. So yep. So this has a target of 234, which is like the center of this liquidity over here. It's actually pretty close to what we drew for the options thing. We were doodling that earlier. So, ooh, that's nice. Nice little trajectory right there. Intersection. I do like that. I think that came from after hours, but yeah, it came from like extended hours trading. Maybe better. That goes way up there to like 242. Well, that's not the most necessary thing anyways. But yeah, that's a decent triangulation. This would be like by end of January. And then earnings is on the 30th, so it's like the day before. Doesn't mean it has to be there. That could be a pivot on the low end where it's down and then up after, but I think that's a pretty decent one. I don't try not to keep all of these on the chart because I know there's a mess, but I'll keep that one. And it may very well be that this cross does go to it. It kind of looks like it. Can't see jack on here. Oh yeah. There we go. Lost my contrast. I mean, it doesn't make a huge difference, but that's pretty convincing to me. It's weak, right? When we did it on AMC, we found that it was pretty strong. Like it's pointed up towards like 438. It's pointed upward. And it's actually weaker on GME or on Apple. Lest you think I'm fudging it, this is what I mean. See how this comes way back up? It looks pretty good. It's actually high, so that would suggest that you're going to track decently back up if it comes back up. Because there's there's more buying pressure here, like pushing it up. But then like on Apple, it's not. It's kind of tracking low, especially this first year. It's just down, down, down. So direction is this way, not upward. That's important. It does make sense to me because, again, I'm looking at this like this is probable going into about earnings and having it potentially come back down right after. So maybe we'll see like a little, I don't know, it could be a number of things. I'm going to guess that it's going to come out sideways here and like hook or something on earnings. I mean, I'd be surprised again if it jumped over and just started going. I don't know. If the expectations are met, I think it won't be as bad, but if they're just slightly off, I think it's going to be bad. I think that fear sets back in. We'll see how this goes. This is definitely a widening, weirdly a widening on the 1 hour. I think it's weird because it started back here. It's like you would expect it to widen into the top, which it did, and then it dropped. But the widening kind of seems like it's still in play, and it's anchored around 237, which is indeed sensible, as that is the ceiling that we've been talking about. So we've got a lot of supporting evidence. This is just building on itself at this point. Building up and building up and building up and building up. We've got a lot of supporting evidence that this is going to end up here. Which again makes sense. But I have to just tell you, like, it's looking very likely. I think what we'll probably experience if it's distribution would be a high volatility shakeout. Like you might have it push up high and then drop low and do like a really high volume, high volatility shake into this earnings date, for example. And you'd know by this point if it's looking bearish or bullish because there would be weakness in the bottom here. And then I think after that, the rest is pretty much history. But from now until about next Tuesday, Wednesday, we got about a week. I'm going to suggest that this does run. Maybe 6.5%, 7%. Yeah, we haven't talked about GME very much. We talked about it this morning. If you were on the very, very early part of the stream, which I don't expect a lot of the afternoon crowd is always, but if you were, I'm just nervous that this is not quite done yet. It's possible this was the bottom, but I don't personally think it came low enough. So just based on what I know about this, is it potentially over? Maybe, but that's a big maybe. I think it's possible this pumps and then drops again going into next week, about a week from now. So I would be cautious about this trade to the extent that if it doesn't come far above 29, I would just watch it down to like near 25, that 25 to 26 area. Because I still think this is the main target, not where we were. Even though we hit kind of the top of it, and we did, like I don't think we dipped it. And I would be not overly concerned, but I would be like, if we didn't go back and try. So we'll see. It actually didn't go that low. It went like slightly above it. I knew it didn't hit that number, so I was like, why does that look like it's hitting that number? Did not hit that number. So it would be weird to me if this didn't try to get down to like that 25 range. I don't know. We did a lot of weird stuff on here, but the main the main thing was like, if this is going to capitulate, this would be like a head and shoulder, and then you'd wait and see if it comes back below $8.43 and $8. But what I found was that I didn't really like it for an option swing, and I'm not going to short it. So if it does go down, I'm just not going to trade it. If it goes up, I think you might get away with something either holding this trend on the backup or recovering back above it at a slightly later time. And this is adding up to be about right if it does not advance again to being about what was expected here, if it needed to re-advance. The reason I visually do that is I'm thinking about where those are when I'm drawing it out, and where those levels are at and where they probably hit. None of this is guaranteed. It's just descriptive of what I'm seeing. So is it possible this still has another push-up? Yada, yada, yada. Yeah. But if it starts coming back down, you're going to want to watch that level. So just be mindful of that. And I think ACHR was much the same way. They looked fairly comparable, like very similar charts. It's easier to see it maybe on here as a kind of a last-ditch effort. You see how it's getting really overbought really fast. The volume is kind of low and flat. It just looks like a LSPY, which is a last point of supply. So this came up and did like a double top. Now it's chopping. It's not necessarily going to die, but in order to, you guys are like, that's horrible to think about. Yeah, in order to continue, you would see this recapture, and then you'd also see at some point this recapture. And so there's not really a great confirmation here until it gets over this top. Then you'd have a case very quickly for like acceleration in an S curve. One of the better examples of this recently was IWM. It was a really long-term, slow chopping S curve. And it did not ultimately go until the very, very end. And it was still like really volatile to the end. So if I'm looking at this from that point of view, I might suggest that, this is the breakout here. I'm going to go back further. Hang on. And just like the other one, it's like it's on the back near the original kind of tops here at 10. So to me, it's a mixed bag because of that. It just has this huge amount of volume here on this push-up. And normally, if you're doing these kind of motions and you're pumping, you're not closing the deal, it becomes an issue of like high volume, high volatility at a top, which is typically more distributive. It doesn't mean it is distribution always. It's just that's usually what you see. So I'm seeing like a question mark of like, does this need to come back down? Does this need to come back down like this one did? This rallied and then came all the way back down to the floor, right? It came all the way back down to basically a similar area that it broke out. And we didn't do that here. And so it's more of a question of like, is this bullish long term, but is it bullish right now? And honestly, it's the same answer that I always give. If it's an M shape and it crosses up and over, it's good. It's going to probably run. Right now, do we have a completion of that? Not really. All we have is like a big divergence here on the 4-hour and daily. It's kind of ugly. It's trying to like maybe reset it. So there's something to be said about that. It might do it. But it would not take much. Dropping through here again, I think you're likely going to come pretty far. You know, that's why I'm like not hugely optimistic on these two. And in order for this to continue, it has to do kind of an SOS triangulation here at this top. Maybe like right there. So that's where it's got to be. And I just don't know. You know, maybe it gets there. It can do it. Great. Seems like you're missing out because it's like $9 and that's up at 12, but it is what it is. If that were to happen, you've got a decent chance here that this could run from this bottom up. This could end up running pretty darn far, at least to like 17, maybe at most like 24. It's hard to say. Like $22 perhaps. So another one that if it goes, it's probably going to go pretty far. What's the original high? 18. Yeah, I mean, it could probably go there. If we use that as a target and we go back to where this leap happened, that's reasonable. It looks like it's kind of in the middle. So reasonably speaking, I think it could go up and test all-time highs. As an S-curve, but if it doesn't, it's probably going to come back to like 5. And I'm not trying to like spook anybody or anything, but it's just what it is. Like that's the fib retracement right there for it. That's the golden pocket. It'd probably come back to 5 if it breaks down. So that's fairly straightforward. I think another part of the reason I didn't like this necessarily for the bull trade just yet was because I think it had already lost the uptrend here. Yeah, I'm pretty sure that right there, that would be your indicator of like where it could hit the top very, very soon if it goes. But at the end of the day, it lost that and it's below it. And so it had to be like a wave back up to hit it, to get there. And I think the lower trend did support maybe a return over time here. There. No, I did that wrong. Here to here. It did support over time, maybe a return back to 5. So I'm not really sure if again, I don't necessarily think this is a bad trade per se. I just think it's a very risky one. If it were me, I'd probably suggest if you did buy in, I think there's a gap low too right here. I would probably put it just below there, like 810. I wouldn't want this if it double bottomed. I wouldn't want this to go like significantly lower. I think you'd be in trouble. If it hit just the gap, maybe it'd be fine. could still go. That makes sense. So if I'm playing it, that's what I'm looking for is like, okay, there could be a big squeeze motion. Ultimately, it would confirm if it breaks above here and holds, and then here and holds. So right at 10, right at 12.50. If it goes low, I just don't want it to dip too low. Maybe down to like $8 and $8.30. And then I'd leave it at that. If it came too low here, and I'd be worried it's just gonna kind of slide out and start dumping, so on and so forth. Going into March, probably. Hey, Dan. Yeah, man. We'll look at Clove. I haven't looked at Clove in a hot minute, so it'd be nice to see what that looks like now. Clove is one, man, it's pretty similar, isn't it? That's really interesting. It's pretty similar to that other guy we just looked at. This top. That's weird. Really similar. It just goes to show you, man, there's not really that much variation in the market when you get down to it. It's always like the same stuff. You know? So Clove has been mostly healthy in this markup phase. It may be widening a bit, but I don't think 2 counts as a widening. So I wouldn't use that. It might be just because of the top, the spread widened here. I mean, that's it right there. That's the basics of it. If it drops beneath this 299 area, it's lost its creek. It's probably dumping. In which case, we would end up looking back at this and saying, oh, it's just a typical double top or something like that, right? That hasn't happened. So right now, you're looking at a potential leg up. It's kind of behind, isn't it? That's where the gap is. Unless this is the higher target at like 1060. There's a window here that has already kind of been working out. I think these are the pivots on the bottom. So I'm like looking over, we were talking about this earlier. Sometimes when you look at those gap levels, I don't know why that is. It seemed like they're sort of arranging with lower pivots, not the top. Anyways. So I'm going to suggest that what's best for this is actually to come back to 390 and build out and then go up. But I don't know if it will do that. It doesn't mean it's going to, you know, just because something like, oh, that would be nice, you know, that would work really well. That doesn't mean it's how it works. Yeah, it's already way overbought. I think what would be best to have it come back, hold 190, and then go. I think if it stays high too long, it's going to, just from the appearance of it, will look more like a distribution because they'd be pumping it up, keeping it overbought so they could sell off into FOMO and then drop it back down. And make no mistake about it, this would probably come pretty low. You can see that drop right there would be the desired output, you know. If it manages to hold and move back to the upside, it's kind of an inversion of that, where it comes down and kind of builds out again and checks that support at 390. I don't see why you can't just go continue and have like a really big second leg here all the way up to the top.
Yeah, long term, this could be a pretty big move. Um, it works as like a 50% marker right here, right at 315, all the way up to 1060. But in order to get that, I believe that you have to kind of prove it with support at 390. There's one alternative where this doesn't come too high. So let's say, for example, it stops right now. Well, it didn't break above the top. So technically speaking, it could still come down and not distribute. It could come down low and form out like a white coffee in spring. It doesn't have to be like definitely down. If it comes too high, I mean it comes above these previous tops and then drops, I think it's bad. Like it's bad. It's probably going to be a bloodbath after that. But right now, actually, it could drop through here and it would be okay because it didn't come too high, like above the top here. So I'd be watching that. Watch the 450 area. You don't really want it to necessarily push it. You definitely don't want it to push way up above 470 and then dump back through the creek. At this point, if it holds low and then sells down, it's fine. I think there's a chance that it could go into a, again, like I said, like kind of a white coffee and bottom here, and then just take off, maybe even around earnings or whatever, or after earnings. You know, that would make sense to me. It'd be like, floor would be here. Yeah, it'll work. 1, 2, 3, 4, 5, 6, 7, 8, 9. Sort of in support of like a early May move or something like that. Late April. Similar. It doesn't match the triangulation. I get that. It looks like backwards, but again, sometimes those triangulations are more like pivots on like the bottom, right? So you could do like that. And then you'd still have that 50% in the middle and take off from it. Right there. The biggest like no right now would be to come over the top, like come really far over the top here and then bleed back through the creek. So if it came above, again, if it went up to like $5 or something, you might be really excited. But if at that point it goes back through this and starts dropping below, I think it's likely going to crap out and just start going down. And that has to do with the ideas, again, inherent in distribution, that you're actually going up to sell, not to advance. And then you use that as a momentum to drive you back down through the creek and then push it through the range. In which case, it's marking back down for a time, undetermined, you know. Either of these other scenarios could be quite bullish. It's just a difference of spring or no spring. And this, though, is a little bit unusual, I think could be fine. This is like an LPS. It's not really an SOS if it doesn't push over the top. So yeah. So this is one that maybe it wouldn't bother me. I mean, it kind of would be nice to have it come back down to 3. I think given the opportunity, a lot of people would probably enjoy buying in again. But I mean, that doesn't mean it's going to happen. And either of those could be an S-curve continuation. So the spring might actually give it more chance for continuation than no spring here. But yeah, otherwise, then you're just looking at whatever's left, you know, backup. Probably down to here. If that happens. It wouldn't be like straight down, but you know what I'm saying. This would be long-term direction. More than likely, again, to come back eventually and check these tops. So if you want to look at it that way, you can. Like this pocket. That's not bearish, it's just time. Take a lot of time. And that might support the idea of that February 2026 being kind of an epic time for the market, you know. This also might lend itself pretty well to the concept we were talking about AMC earlier of like we missed a range, we didn't trade it. And so there's this preliminary supply right here that's trying to stop the advance. That might end up being where we come back to later. There's a gap fill. It's a previous top, or previous bottom, previous top. It's a nice place to have like a backup to the creek. I don't know. From a wave perspective, it just sort of makes sense. Yeah, it does sort of bring up the ideas of like a January 2026 into February move. And that's one of those things that like we've done before. So it's like the same concept here, except it works to the benefit of bulls. That's one of those things we've kind of looked at before, is like that February time period. You know. You can join the Discord by looking up my name and just telling me you want to join. I don't give it out except to people that ask. And if you spam, I'll just stop talking to you and kick you out or whatever. Once I give you a link, so you gotta message me or whatever. Once I give you a link, then you have to go and accept the terms and conditions. So you'll get a link to the Discord, and it'll lead you to a splash page that has the rules. I've only ever kicked out one person. So you're not likely going to get kicked out. I kicked out one person for like habitually being ill-mannered to some degree, but more like just bad attitude, and like just, and then after being asked several times to kind of like mitigate their own attitude, they just wouldn't do it. So, and that's the only time I've ever banned anybody. So there's not a very good chance that you're going to get banned if you're worried about something like that. It's not that kind of a group. Most of it's pretty chill, mathematical stuff. It's kind of boring, but that's the way I like it. It's a very boring Discord. Well, not a lot going on today, guys. I think we're done. We've done a lot of analysis on AMC, GME. We did like dozens. I feel like we did like a dozen charts today. It's been kind of fun for my brain. Yeah. I'm going to have to revisit Knox because I really think this is I don't know, man. There's something wrong with this trade, but I feel like this is like a huge opportunity to trade it back up to 23. I'm just kind of nervous about it. I don't know, for random reasons. I've already talked about it, but it's like too perfect. But this is one I'm definitely watching because I think it could have a potential like 300% move in store very soon. What about AMC? It could also have a 300% move in store. We don't know. You know, the market may end up squeezing a lot of these stocks at similar time frames, but for now, I'm just kind of keeping my eyes open. This one makes me nervous, but I think it's possible. I do. I think it's possible that it goes. So, yeah. That top is measured out like exactly. Everything's measured too perfectly. It bugs me. Oh boy. No, I'm not worried. I'm just telling you. I mean, if you did, I would just be like, all right, sorry, but you're gone. But like, I don't want you to come in thinking there's no rules and like do whatever you want. It's not designed for like posting just dumb stuff. That you can do that elsewhere. That's not what that group is about. It's meant to be as professional as you can, impersonal as possible. Yeah. I don't know. Is this thing gonna like rip to the moon or what? Or is it gonna like head fake here and then dump like nobody's business? And pull a cat ear on us. These are the exact same scenarios. I need to have like another scenario on. It's really right here. Once this holds, it would just kind of go, I think. I don't think it's going to keep backing up forever. It's nerve-wracking, huh? Whew. I'll look into it. Maybe there's something cheap way out there that wouldn't kill me if it dropped. At least I'd have some time to get out without losing like a ton. All right, y'all. Have a good day. I'll talk to you later. Thanks for hanging out with me.